Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning, good afternoon. Welcome back. Hope you are well. And hey, it's a new day. Yesterday was kind of crazy for a number of reasons. Hope you did okay yesterday. I know a lot of people on days like yesterday lose a lot of money, make a lot of money. It's been weird, you know, just being in the trading industry for so long. You kind of get used to this weird concept of like people coming and going, right? A lot of people come to the trading space. They are excited because they saw somebody on YouTube make $7,000 in 30 seconds. And they're like, that could be me too. I could do 30 seconds of work and make $7,000. But of course, it's a little harder than that. And when people realize it, they lose some money, they quit, and and then new people show up. Isn't that a weird concept? Anybody else feel like that's just such a strange? It's kind of like, you know what I feel like it's like? I've never lived in a beach town, but I feel like it's like living in a beach town. You know what I'm talking about? Like if you, I met a kid one time. He lived in a beach town. He said it was a really strange concept because you basically have seasons where everybody wants to be in your spot and they're there. And then during the off season, it's like a ghost town. It's like super quiet. Nobody's there. Some part of me feels like I would enjoy living in that type of environment. I don't know why. I just feel like it would be so cool to have like the season and then also just be like relaxing by myself, chill out during the off season. Anyways, trading feels like that. It's so much like that because you have so many people who come and go in the trading space. And it's not really like it's normal because, you know, same thing with like the gym. Right? There's a lot of people who come and go in the gym. We're seeing that season right now. I used to go to a public gym. I now recently purchased a home and I have a small home gym that I work out in. So, you know, when I was in the public gym, it was like that. It was like during January, February, you got a bunch of people who, you know, by March are no longer there. But it's just anything like that. Church, for example. I you know, go to church. I think I'm the one of the creasters, if you will, which is the people who show up just during Christmas and Easter. And you know, same thing with the church, right? They every time you go in there, Christmas and Easter, they try and get you on the, hey, you know, you need to be coming beyond just Christmas and Easter. And every time I'm like, sure thing, and then I don't. So, anyways, trading is not easy. That is why it is, everything difficult is not easy. Bro is stalling. I got a lot of stalling to do. Yesterday we had a 6-hour live stream. Now I was on for about 2 hours of that, and then we had other guests that were hosting throughout the rest of it, 2.5 maybe. But yeah, we got some stuff to talk about here today. Earnings out from some key players yesterday. You had Microsoft, you had Meta, and you had Tesla report their earnings. But before I get into that, let's just take a look at where we're at. Stocks a little bit lower, and then now bouncing back here this morning just a bit. NASDAQ about flat. Dow Jones seeing some selling here this morning. Gold is rocketing here this morning. And Bitcoin has been one of the most impressive recently, in my opinion, with some gains pushing it back up to 105,000. Really crazy. Everything that's difficult is not easy. Say that's just genius, right? I think what I meant is everything that's like worth something, like worth having, like amazing, is not easy. So I can revise it, Lincoln. What do you think about gold? Okay, so first of all, let me just say this. Hey, if you guys are not in our Telegram channel, I will be posting a lot of gold updates throughout the week. It is something that I do almost every day. Almost every day I put out my gold chart of the day. This was just a teaser picture here today. If you're not in the Telegram channel, make sure to join, and let's drop the link to that. There we go. Thank you, Chandler, for that. Guys, in the live stream chat, it is free to join. Come join the Telegram channel, get some updates on what's happening in markets. Of course, these live streams are great, but sometimes, outside of live stream times, I'll just drop some charts and some things that I'm looking at. So if that would be useful to you, take a second to join our free Telegram channel. The link has just been dropped in the chat. And for those watching at a later time, it will also be linked in the description down below. So when I look at gold here, gold has had a really, really good push. And it actually, in my opinion, actually, I'll show you my opinion here. Let me pull that Telegram chart back up just a second. I actually did a poll this morning, and again, this is why you should join, because you can join the polls. So I did. Will it break out? And I voted yes. I think it will. I think gold is going to continue. That being said, I'm still not going to buy gold unless we get some sort of breakout here. But I'm just speaking purely from momentum base. This is a really strong move we're seeing. Momentum looks really strong. I'm curious to see if we break out here. If you get some pullback and a good setup on the dollar index, gold may be an interesting play to continue watching. Now, I don't love gold from a fundamental perspective. It does not pass my filter here on the Edge Finder. With gold getting a neutral reading, no trade for me. I can't trade that. But despite my system saying, no trade, that it's neutral, what I can do is I can look at some of this data and say, why is gold getting a neutral reading? Well, we can keep it pretty easy. We go to the economic heat map and we say, look, what in this list is pointing towards gold neutrality, I suppose? Well, GDP growth, PMIs, those are showing a strong, growing U.S. economy. That's not really a great environment for gold. For gold to go really, really strong, what you want to see is a weaker dollar off of the idea that, well, the economy is slowing. We don't have the economy slowing right now. So that dynamic missing from the picture makes me really not so interested in being long gold. If we have a strong economy and cooling inflation, that environment is stock indices and cryptocurrency, which is what I've been on recently. That's been like the focus for me recently. Now, there are times where I trade gold exclusively, like I'm just trading it in and out and in and out. But right now, I've been focused a lot more on indices and crypto. Because you look at our growth metrics, look, Jobs numbers have been strong. GDP numbers. Actually, we get GDP numbers. Do we get GDP numbers in 7 minutes? We do. We do get GDP numbers. Oh, this is exciting, guys. I knew we got unemployment claims, but I forgot that this morning we get the critical advanced GDP numbers. Okay, we're talking a busy live stream. Every Thursday, of course, we're here for unemployment claims, but I did not, or I forgot, I had seen this before. Advanced GDP numbers coming out in 5 minutes, guys. This has the potential to be score changing. Now, I know this is how you know you're reaching your 30s, is an economic. I'm 28, or am I 27? No, I'm 20. I'm 28. So I'm 28 years old. I'm getting close to 30, and an advanced GDP number coming out gets me excited. That is how you know you're getting close to 30s. Anyways, advanced GDP number coming out. The reason I'm excited for that is because that has the potential to shake up some scoring here. Previously, the forecasted number for advanced for GDP growth was 2.8%. Came in 3.1. It was like a boom shalaka, looking strong for GDP growth, right? We said, okay, that factors in. The score all over the Edge Finder gets changed by an uptick or downtick in economic data. That is how the Edge Finder functions. So whenever we get a key economic data point, I love trading news because oftentimes that's how my setups occur, right? So when trading news comes in, so we're forecasting here a 2.7 year over year GDP growth number. Wait a second. Yeah, okay, no. Sorry for the loud swallows. 3.1% was the previous time around. We're waiting here momentarily to get the next round of data on a year-over-year basis. We are looking for advanced GDP to come in around 2.7%. So if you get a 2.8, if it's higher than this number, then that is what? Strong for the dollar or weak for the dollar? Think about it in your head. It would be strong for the dollar. Would that be good for gold or bad for gold? If you have a strong growing economy, is that good for gold or bad for gold? Bad for gold. Doesn't mean that gold has to crash on that number. It's just something that would hold me back. It's what we talk about, right? We've been making the comparison recently to how a lot of traders, even newbies, understand like, oh, I can apply a moving average and that can help me to filter a trend on a technical basis. But what I look for is not just a technical chart setup, but also an Edge Finder confirmation or a fundamental confirmation. So gold does not pass the vibe check for me right now. So I've not been trading gold. And although recently I wish I was trading gold, like I wish I was long on this, for this whole period, I saved myself thousands of dollars just listening to the Edge Finder and saying, nope, no trade, gonna wait. So I'm still waiting. I'm waiting for the technicals look good, but we need the Edge Finder's fundamental confirmation for me to actually start taking trades on gold once more. Right now, we are sitting just in the neutral camp. I know that's boring, but I'd rather be bored and not taking trades that I'm not supposed to take than bored so I take stupid trades. That's a silly approach. I'm going to wait for confirmation from the Edge Finder, confirmation from the technicals, and then I'm going to play the game. But that's how you trade. You don't trade just, oh, gold's chart looks pretty, I'm going to go long, right? Because maybe that does work sometimes, but it looked pretty here. It looked pretty here. Those were fake outs, right? So I need to see Edge Finder confirmation and some pullbacks into support levels. If we get that combination, you'll see me taking long trades. But right now, no cigar. There's nothing there for me. I can't force trades that I'm not, I've done this for a long time. I have a system that I do not break. I use the same approach over and over. Systematic. Use the Edge Finder. Look for technical setups. Manage risk. Use the Edge Finder. Look for technical setups. Manage risk. Use the Edge Finder. Technical setups. Risk. Edge Finder. Technicals. Risk. That's what we do. We do that over and over and over. We got 1 minute to go. 1 minute. See? We got 1 minute. We're okay, so we're 1 minute to go. Let me just switch over to all markets. Like I said earlier, if you're not in the Telegram channel, make sure to join that. I will be posting up some updates. Got some charts that I want to get through today, and I will be posting those after stream. Telegram link is in the chat. and in the description down below. We'd love to have you in the community. We always do like community votes and stuff like that. We do giveaways in there, so don't miss the chance. It's free to join. Join the Telegram. Okay, guys, we've got about 30 seconds here to go. Advanced GDP numbers will be coming out. We'll see how this moves the market. We also have unemployment claims, so we're going to get some key growth metrics here in the U.S. economy. Dollar index has been up, now fading before the news. Let's see what happens to the dollar as we come into this number. We'll go ahead and do our breaking news. ECB, by the way, was also this morning kept their or cut their interest rate as expected. We do have the ECB press conference in just a moment as well, or just a few minutes. Let's see what we got here. Initial reaction is mixed. NASDAQ flat, S&P moving slightly higher on this number. Dollar index also slightly higher. 207K. Whoa, look at the advanced GDP number coming in at 2.3%. Wow. Okay, wow. So advanced GDP price index also came in lower. This is good for inflation. Inflation, we want to see that down. So good for inflation. Unemployment claims came in lighter than expected. That is good. It's good for the dollar, right? Let's think about that. Unemployment claims coming in less than expected. Less people filing unemployment. That's positive for the U.S. jobs market. So strength there. A little bit of softness in the GDP number. And then prices coming in lower than expected. Always a good thing for the inflation story. So you have a win for inflation. You have a win for the labor market. And you have a miss here. So I would say that makes good sense why we got a little bit of a mixed initial reaction here. The dollar index is now trading back towards its 1 hour kind of range, has not made a huge move one way or the other. And stocks are just kind of bouncing back from the sell-off that we saw overnight. London session took the stock market higher initially, then lower on the futures. And then NASDAQ is also positive. Let's take a quick little pulse check here in terms of stocks. We've got NAS up 0.38%. I think that the lower inflation read as well as cool economic growth or GDP number may be in a weird way welcomed for interest rates. Let's take a look at interest rates. Make sure I'm not going crazy on this. I'll give you guys my best cover. You guys always know I give you the best coverage I possibly can, but I got to make sure I don't make mistakes here. Yeah, seems like what is happening here today is the market is taking that as a less inflation outlook. Fed may cut rates still. I think the outlook for now is a cut in June, I believe. That's market forecast. I got to check the Fed Watch tool, but a little bit of coolness in the U.S. 10-year treasuries. I'm happy to see that because I have a long position in TLT. TLT, I'd welcome a bigger push to the upside off of lower 10-year yields or lower forecasts for inflation. So a little bit of coolness in the economy, not a horrible thing. Now, again, this is still a strong economy because you have a strong labor market. You still have GDP growth above 2%. That's pretty good. So you've got good reads, but then it's not too hot. So they might actually get some cooling in inflation. Disinflation is a good thing in this market right now. Disinflation is Bitcoin's best friend right now. Bitcoin is a risk asset. It wants to see economic growth and low inflation. Seems like we still have that story playing out. That is why I continue to stay long Bitcoin. This is a trade that I've been in for some time. Picked it up over here around 92,000. Nice little bump, consolidation. I'm looking for the breakout. If we can close, this is what I'm looking for on Bitcoin, guys. If we can close above this high, I'm going to go ahead and lock more into my trade. I'm going to trail stops on this one if I can. But right now, I'm just giving it some room to jostle around, right? It's not being decisive at this moment, so I'm going to wait. I'm just going to sit through it. I don't mind. As long as we don't break this low. If we break that low, I need to get out of the trade. So that is my risk management on my Bitcoin trade. I am also still long U.S. stocks. the S&P 500. I'm long on this one. Kind of a boring mover the last, well, not boring. I guess it's been pretty volatile. Hit this big drop. I picked it up here, and I have a stop loss below those lows. So if it tanks and fails out at this trend line and key level of support, I'm going to get out of there. But both of these trades, you'll see, coincidentally, Bitcoin's getting a strong reading and the S&P 500 is getting a strong reading. So those are why I picked those setups. I'm not just looking at technicals. I always want to make sure that I'm aligning with the fundamentals and the technicals, right? So again, I always make this point, but most traders fixate very heavily on just technical charts. And they go in circles, changing their technical trading strategy, trying to look for one that doesn't fail them. And the reality is technicals are not a holy grail, just like nothing is, right? What I look for is I look for fundamental trends that are playing out in markets. And then I look for technical entries and stop loss placements and risk management to kind of carry the trade. But I don't trade just because a chart looks good. I trade a good looking chart with a good underlying reason to be bullish or bearish something. Here's an example of one that's not working out so well. Oil has been giving me some struggle here recently. Take a look at oil prices. Looks like I might get stopped on this idea. I bought this pullback here. Really love the technical setup, just not seeing the follow through, and that's going to happen. Nothing is going to work 100% of the time. But if we break this 73 level, that's my cue. Time to exit the trade, take a loss on oil. So I'm watching that one. Silver working very well. I've got a long position or a bullish position on oil. I shorted puts on SLV, the ETF, looking really good here today. So probably going to take a full profit on that one pretty soon. And I'll update you guys inside of the group for those of you who are in our Discord. Russell looking good. Nice little pop here, up 0.8%. And had some good news overnight for U.S. stocks. Tesla, a stock that I own and have bullish positions on, up about 4% here to start the day. Great little pop here. Although revenue and earnings missed, there was some excitement in the AI category of the earnings report. And yeah, I mean, it's a stock that I've held for a number of years off and on. I've traded this one and done a lot of options on it as well. So Tesla looking good. Microsoft not so good. Had a big kind of drop here. Then it rallied. Then it dropped back once more, trading down 4% pre-market here, around $423 per share. And then the other one, the big winner here, Meta, which I guess it was up more than this. At one point, it was up 5-6%. Now up just 1.6. Still, this stock has been on a rip to the upside here recently. You can see Meta just a major winner here in the recent, DeepSeek sell-off stuff. Meta was a big winner because it just means potentially more competition in the large language model stuff, which is positive for a company like Meta, who could get cheaper prices on AI technologies that they need to run their business. So cheaper costs to them are a net win. So Meta just killing it. This is a company that I wish I owned. I do not wish I owned a lot of Meta. This company is a beast. Look at that chart. That's a beautiful, beautiful upward trend. And again, I'll look for dips. If we get dips on Meta at some point, I will buy some shares. But right now, no opportunity there for me. S&P 500, like I said, just going to stay in this trade, still trading flat, and we'll continue to watch that. Let's take a quick look also at some retail sentiment here this morning, see where the crowd's at with everything. What I've noticed is that, again, you've had some really extreme moves in things like gold. You've had some extreme moves in things like the euro over the last several months. The pound, if you're looking at the dollar here, struggling to kind of just chop around here at support. I don't know what's going on with our retail sentiment page. Actually, I think it's maybe just the edge finders. Nope, it's just my computer. Okay, so yeah, you've got some interesting things. I'm just going to look at the major currency pairs for just a second for our currency traders out there. Here's a look at retail sentiment for the day. You've still got some concentration here. A lot of people are very long on things like NZD USD and AUD USD, and then very short on things like USD CAD. So retail still seems to be favoring shorting the US dollar. And that has been a painful trade for some time. As we look at the US dollar, which has been in a nice upward trend, retail traders may have had a little bit of relief here recently that are kind of shorting the dollar index. But for the most part, this has been a runaway train to the upside. And in my opinion, the path of least resistance for the dollar index is to continue higher overall. So, we look at something like dollar CAD, we may actually have some trade setups here fading the retail positioning. So what I mean by that is let's look at dollar CAD and let's say, okay, so if retail is betting against this move, how do I want to play this? Well, maybe for the currency guys and girls out there, maybe we look for this to the upside and looking for pullbacks and trading in the direction against retail traders. It's not like predatory. It's just look straight up. A lot of times retail traders get caught in the wrong side of great movements in the market. And if we can track that data and trade against it, there can be something there. It's not a guarantee that this chart, is going to continue to beat up retail. Like it will reverse at some point. But right now, the dominant trend on something like dollar CAD is still to the upside on the daily chart. You've just had this phase of consolidation. So you had big win consolidation, big win consolidation. Let's see if that trend wants to continue. We don't know the certainty of that happening, but I would say it's a good chance. Good chance the dollar continues to go higher. If it doesn't, right? If it doesn't, then we manage risk, and we stop out of trades, and we control our sizing and all that stuff that we preach over and over on the channel. So that's what I'm looking for. Current top setups on the Edge Finder here. Let's just take a look at everything except our neutral readings. We've got US stocks still getting strong readings. NASDAQ, Dow Jones getting a plus 13 on the Edge Finder today, guys. That is really strong reading. Bitcoin also very strong, plus 9. NASDAQ plus 10, plus 13 for NAS or for Dow. Oil still getting bullish reading. I may try a second time on this one if I get stopped out. S&P 500 also holding on to a bullish reading as well. On the bearish side, you got things like euro dollar, pound dollar, Kiwi dollar. You also have some yen crosses, Kiwi yen, euro yen, Aussie yen, pound yen. So a lot of currency pairs against the Japanese yen and the US dollar getting some bearish readings. Really like to see that. When you get this kind of cluster of yen crosses, I like that as a kind of a stronger read. So I'll look at some yen pairs as well, see what's going on that front. By the way, guys, if you have not taken advantage, the Edge Finder 35% off discount is ending soon. To get access to the Edge Finder for a 35% off discount, we'll drop a link here in the chat. You can currently get a major savings on the tool. And the best part is it is a one-time payment to use our tools. You get access to our top setups algorithm so you can do this process for yourself. If you want to start using a systematic approach to trading and looking into fundamental analysis like sentiment data, like COT reports, retail positioning, this data is all being pulled in automatically for you, and it's being algorithmically, systematically scored so that you can just get a general idea of how the fundamentals look for your favorite currency pairs, indices, and commodities. If you haven't already taken advantage of that discount, it is 35% off for a very limited time. Click the direct message link here dropped in the chat or in the description of this live stream, or you can head over to a1trading.com. And when you do that, all you do is when you start up the live chat with our team, click chat now, and you'll be connected to a real person on our support team. Just click Edge Finder 35% off sale event, and that will no longer be available for much longer. So take advantage while you can if you've been thinking about it. Okay, so continuing on here, mentioned some yen pairs. Look at the yen pairs, by the way. Big slide to the downside here. For some yen crosses, you've got dollar yen moving lower, momentum starting to pick up here to the downside. You've broken out of some of these key levels of support. I'm sure in just a few minutes, we will discuss with Miko and Marco, who I believe are coming on today, some of the key stuff that we're looking at in yen pairs. I mean, look at CAD yen, Aussie yen. Look at Aussie yen threatening the lows here. We've got a key level of support right here. Key level of support getting tested, right? Let's see if buyers can kind of hold that level, or if the yen is going to really have the strength to start breaking lower on some of the stuff and head back towards 94 for something like Aussie yen. So yeah, really interesting. Kiwi yen, same story. Look at this chart. I mean, big level of support here getting tested. If that can't hold and we start breaking that level, we very well could see continued push to the downside. I'm going to probably do some yen crosses in the Telegram channel as well. If you're not in there, what I've been doing is just dropping some technical charts that I'm looking at. If that's something you're interested in, it is free to join the Telegram. The link is in the description, and we'll also drop it in the chat for you. You can find us on there and keep up with our charts that we're posting throughout the week. Fundamental value of Bitcoin is zero. I mean, here's the thing. Bitcoin is, I've heard that argument for years, and you're not wrong, but also what is the value of the dollar? The dollar is just paper, right? So Bitcoin is just digital, technology. And it's either of these things, the dollar or Bitcoin, is only as valuable as people say it is, right? US dollars backed by the US government. Well, Bitcoin's, and nobody said that, but I'm just kind of throwing that because I know that's the next one is, well, US dollars backed by the US government and military. Well, that's true, but I don't know about you guys, but it seems like the US government seems pretty okay with Bitcoin recently. In fact, there's speculation that what if the US government is like totally even like full support and may actually make if the crypto capital truly becomes the United States, does Bitcoin have fundamental value then? Absolutely. If the most powerful country on earth starts saying it does, guess what? It does, right? It's a weird concept because it's so new, but it's possible. And again, I'm not out here saying that's going to be the future 100%, but to say like there's no chance of that happening is also not quite right. So the chart is very speculative for that nature. It's saying, well, that might happen. That could happen. And if it does, people want to buy it over here. They don't want to buy it after it's already happened. That's the idea, right? It doesn't change the fact that Bitcoin is useless. It's just a speculative asset. Totally is a speculative asset. But again, the dollar is just paper. We only give something value. We as a collective society decide what has value or not. The dollar is just paper. It is just a number on a screen. Bitcoin is just paper or it's just like digital paper on a screen. It only has value if people say it does. So it's weird, but you can't say the dollar has fundamental value and Bitcoin has no fundamental value. It's all about who says it has value. If everyone says it does or everyone does not say it does, that's the point. Is I wouldn't disagree. Is absolutely a speculative investment to buy Bitcoin because it may go to zero. It may also go to 5 million, right? It is totally a speculative investment. But you can kind of look at some of the trends, and I would say that there's a better probability that there's more adoption ahead than less. That's the trends we've been seeing in recent years. People in the young generation seem to like Bitcoin a lot. So it's worth not ruling out entirely. And that's why Bitcoin's not trading at zero. Okay, so up next, we're going to take a quick break here. I mentioned this earlier, but don't forget, if you've been waiting, that is ending the 35% off discount on the Edge Finder if you want to start trading with a systematic approach to fundamental analysis. Many traders are missing that and they're looking for it in 2025. We had a record-breaking number of people try out the Edge Finder in the last few weeks. It's been on fire. A lot of people have been checking out, and to kind of give people a chance to pick it up for lifetime, we've dropped the price substantially just for this week. So if you've been thinking about getting a copy, the link is in the chat right now to speak directly to our support team who can hook you up with a copy. We're going to take a quick break, and then up next we have Miko, and I'm not sure where Marco is. He's not here yet, but we're going to at least have Miko. Him and I can take a look at some charts together, and maybe Marco will join us, maybe he won't. Anyways, we'll be right back after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. What's up, Miko? Welcome back to the show. How you doing, man?
I'm doing good. How are you, Nick?
I'm good. Miko, help me out with this. The comment section has become a healthy debate. No, we're not going to call anybody toxic, but we're having a healthy debate about Bitcoin here, right? Just joined. What are your thoughts on Bitcoin beyond just the technical chart? Do you think, do you see the vision for Bitcoin? Are you a crypto believer or more just an active trader on it? Actually, you don't really trade it. You just hold some XRP, maybe Bitcoin, or just in general, the concept of crypto. Are you a believer or are you a non-believer?
I would say I am a believer. Again, I think crypto gives us another kind of opportunity with money. Like it's similar, but it's different, and it allows people to not have any ties necessarily to like USD to like the States or pound to UK. Bitcoin is global, so I think there's a lot of hope with crypto because it allows so many other things that you can't do with money in terms of trading money, spending money as well. So I think I am just generally a believer. I'm still pretty curious to see where everything goes, but I do think the direction is up. So I do think, generally speaking, Bitcoin will gain value. I think other cryptos as well. So yeah, I'm a believer, but I'm still kind of curious to see where it could all end up.
You know, I'm like a very soft believer. I'm not someone who like puts all of their, paycheck into crypto every week or anything like that. But, there's a couple things that have really changed the story over time for me, which is the first and foremost one: the US government does not seem to be an antagonist to crypto. That is massive. You would think, hey, that's a rival to the dollar. That should be, a massive, Fed shutting it down, government hates it. But in fact, we see a administration that seems pretty favorable to it. And even an SEC chairman that's pretty favorable to it coming into the picture. And even yesterday, Powell was asked about it, and he said it's as long as banks are, doing their part to do, safety checks on it, they don't see it as a threat. I mean, you've got an environment here on the fiscal level that is not super opposed to crypto existing. I think years ago, I remember a lot of people were like, oh, the US government's just going to shut that down and it's going to be over. Now there's been other governments, I think like the Chinese government's not a big fan of crypto, but so that's a big positive thing, I would say. The other positive thing is like every year, there's more stuff using it. There's more adoption. You can use it to do more things. You can purchase things online. And then, there is some regulation coming into it. Like you have Coinbase and exchanges that are being, involved into the kind of traditional finance system. And crypto has become more mainstream finance in the last 1 year than I've ever seen. Right. We have ETFs for Bitcoin now run by BlackRock. Right. So we have massive adoption in terms of financial markets. And then the last thing is every year that crypto doesn't go to zero, I think it's less likely to go to zero, even if it just traded sideways. I think it not going to zero is just like it's becoming more and more accepted to a degree. So I don't know. I feel like I'm not like a buy and hold forever, but right now the trend seems to be very clearly more positive for crypto than negative.
Yeah, I think more people are just believing into it because the more and more people that believe into it, the more value it has. Like 5 years ago, way less people believed in Bitcoin and crypto in general. 5 years before that, even less. And I think 5 years in the future, if everything stays kind of what's happening now, a lot more people. So as that gains momentum, I feel like the chances of course, price going to zero just keeps halving. So yeah, I think in the long run, if more people can get on board, which looks like that's probably what's going to happen, I feel like crypto's here to stay.
Yeah. Interesting debate as always. I mean, at the end of the day, it is very speculative. It can, even if it is, the future, it could still go see 50,000 again before it goes
Hmm.
to a million, right? Like that's the thing about assets like this is they're incredibly volatile. Miko, if you want to share your screen, I'd love to
Oh, yeah.
just see whatever you're looking at here today. You've had some big movements here recently. Yesterday, the big Fed day, you had some stock earnings. I mean, volatility is all over the place. Very curious to get your thoughts. I know yesterday I saw you made a post about gold. Are you looking to trade gold? Are you in a trade?
Yeah, gold looks like it's. I mean, I was looking to trade gold, but it's looking very bullish today. So I don't know if I would get the setup.
Mm-hmm.
I wanted. I was looking for a breaking retest of the high here. We spoke about this opportunity last week as well. I'm pretty sure. The retest of 27.20. We came very, very close to that level, I believe. Yeah, on Monday. Just missed it. Now price is looking bullish, and looks like we're probably going to create some new all-time highs here. So gold, although I'm not too upset about missing this trade, because I feel like the real opportunity is actually with silver, because
Yep.
I'm actually expecting silver to follow what gold's doing and probably get back to these highs pretty sooner. So I do think silver's got a lot of catching up to do. And if that's the case, there's a long way to go back to that high. So although gold might be sailing off without me, I feel like between current price and here, there probably will be an opportunity for me to take. And we're seeing some really, really nice momentum. Silver has been quite corrective, so I haven't been looking to trade it. But with this momentum now, things do become very interesting. So maybe some break and retest opportunities could look good maybe next week. But I do expect silver to pick up the pace. So yeah, I was looking at gold, still am if it comes back down to retest. But I feel like probably silver I'm going to have better luck with. But yeah, I'm bullish on both of them.
Yeah, I'll brag for a second with one of my silver trades here recently. Miko's, I actually, so you mentioned consolidation. I have been loving the consolidation because I did something that I don't want to go into too much detail, but I shorted a put on silver. The ETF that I trade is SLV. So what I did is I shorted a put at this level here of support that I liked it. And I said, if it goes there, I'd buy it. And what the market did is just go sideways for quite some time and is now pushing to the upside. But the cool thing here is because I shorted that put, all I'm saying with a short put is like, oh, I'll buy the shares if it comes down here. And in exchange for making that promise, I got paid about $1,250 on that position. So even though the market went sideways and is now moving up, during this sideways motion, that put actually lost value. And because I'm shorting the put, that's good, right? The put running out of time is a good thing when you're short the put. So kind of a nuanced way to play silver, but I've been shorting cash secured puts on silver for years now. It's one of my favorite plays. But yeah, I mean, I like the movement here. It seems like you're finally starting to get some momentum coming in for silver. And I actually greatly agree with you that if there's going to be a metals run, a real metals run is always through history, not all, I guess not always, but most of the time
Mhm.
is led by a push in silver. So if you're really bullish in gold this year, you may want to consider or just look into what is silver doing alongside it, because you might actually, here's a good day for gold, right? Up 0.9%. Here's a day for silver. That is also a good day. It's almost 1.7%. That is a big percentage move for a commodity to have in one day. So, all different ways to play stuff, but I like the metal bullishness. Um, Charts look great. I mean, gold right up to that all-time
Mhm.
high. I love trading that kind of environment. All-time highs, sometimes they're hard to like find entries, but I like the follow through that you often get. Like an all-time high breaks out, and then it's like, oh, that thing just wants to keep going as new buyers kind of flood into it. So yeah, I mean,
Mhm.
we'll see what happens there. What about the dollar? Dollar index just sitting here at support, not moved a whole lot in recent days. Do you have an opinion on the dollar? I mean, obviously, if you want metals to make some good pushes, you probably want a weaker dollar. But do you see weakness for the dollar coming, or are you more kind of just neutral or even bullish? What do you think?
Yeah, with the DXY, things have been looking a little bit choppy. I mean, overall on the higher time frames, which is kind of where I get my long-term bias from,
Hmm.
I've said since the start of the year, as long as price stays above the high here, I will retain a bullish bias. If it breaks below, I'll be bearish again. Reason being, because this is kind of like our 2-year range for the dollar. We've been fluctuating up and down, and then towards the end of last year slash the beginning of this year, we got the breakout. So I wonder, is price actually looking to break back underneath? And we are looking bearish the past few days here. So, of course, if that continues, that will help out silver and gold to the upside. And if things continue and we do start breaking through support here, I will look to change that bias and long term be pretty bearish on the dollar and look to kind of change my bias in euro and pound and other USD pairs as well. So with the DXY, I'm kind of just waiting to see what we do at support, because if we do bounce here, I will keep my bullish bias and look to see if I can maybe short euro or pound. But if we do break through, I will be pretty bearish. And that really does stem from just that higher time frame overview of what we're doing with this range. Because if we do stay above it, there's a pretty good chance we do make our way back to the high there. If we do come crashing back down, then we probably will see a full swing back to 101, 100 pretty much. But either way, there's a big move to be had here. But yeah, currently very bearish, and we'll see what we do at support, and I'll make my mind up for the week.
I love that. I love that weekly chart, Miko, because I actually want to ask you about that. So we've got the dollar index at a weekly level of support, as you've just shown on your screen. Big
Hmm.
key area. And you mentioned, of course, for audience members who are not, maybe used to your show, Miko is exclusively a technical trader. And the power of that I always kind of point out about purely technical traders. I am not a purely technical trader, but this is one thing that I really like about it is that they don't have that fundamental filter that I do, which I love that fundamental filter. But what's great, the positive to not having that is you can turn on a dime and be bullish or bearish something just because momentum has cracked the other way. So, but my question to you, Miko, is okay, big level of support coming into to be tested here on the dollar, right? I'm just going to mirror your chart idea.
Hmm.
If we start breaking and we do have a larger scale, and by the way, we saw this under the previous Trump administration, the dollar index proceeded in the first kind of year of his administration to actually go bearish for some time. Let's just say, leaving fundamentals at the door, let's just say we break that level of support as you're talking about. How would you look to play that? And specifically, like obviously you just mentioned liking the idea of silver upside on that kind of move. That would be a great environment for silver, would be a fall in the dollar for a few months. Most likely that's going to be a real strong move for silver and gold. But what about
Hmm.
on the currency front? Would you, of course, when you're trading currency pairs, you have a decision to make. You can choose which currency you trade against another currency. So if you see that breakout to the downside and we start to get some weakness in the dollar truly forming, what would be your pick? Like what would you trade? The pound? Would you trade the euro? Obviously to the upside against the dollar in that environment. But walk us through. Would you look at
Hmm.
the Australian dollar? What's your favorite kind of pick of the litter, if you will?
Yeah, so I would say the euro, and
Okay.
because euro USD and the DXY, of course, very very correlated. So when I can kind of see a clear bias or clear setup on the DXY, I instantly go over to the euro because that normally mirrors it pretty much in the opposite direction most of the time. So with euro USD, and this is the weekly chart for euro as well, it's pretty much doing the same thing as well. There's a really strong level of weekly support right here, turn resistance. If we see the dollar break underneath that level, we'll probably see euro break above this level. So I'm pretty much looking for opportunities. Of course, pound USD probably do something similar as well. But in terms just of the synchronicity between those two markets, euro probably give me some really nice setups if we do break above this area. And then, of course, with euro, I'm looking for something similar as well. If we do break above this area here, euro's been in a 2-year range pretty much as well. We could be talking about a really big move back to 1.1 in the long term. Of course, a lot has to happen for us to get there, but just in terms of pure technicals and support resistance, if we are not getting the breakout here and this is a fake out, euro's probably got a good chance to see a move in the opposite direction as well. So yeah, I'll probably look at euro most. I'll be looking at pretty much all USD pairs because my plan is to take the best trade possible. And if dollar's going to be weak, there's a good chance Aussie dollars are going to push up, euro is going to push up, New Zealand. So I'll pick the better one, but most of the time it is euro USD. So yeah.
Okay. Yeah, no, that makes sense. I think I would say for me with the euro, the path of least resistance, at least right now, is continued downside overall. But to your point there, if you do get some more kind of surprise in the dollar that weakens it, the reversal could be pretty violent, especially if you get like the chart level that I see here, 1.06 for euro. If you get a break above that, I think what you're going to start seeing is some major short unwinding on this currency pair. I mean, this has been a very popular downtrend for institutional money. And I find this so fascinating because this is where I think we cross over the most, Miko, in terms of like, if I'm like the fundamental super guy and you're the technical super guy, sentiment is somewhere in the middle. Sentiment is a mix of like looking at, because when you're a technical trader, you're looking at charts and trying to decipher psychology of the markets. Well, sentiment is doing the same thing. If we take a look at, like, for example, retail sentiment for a lot of these currency pairs, I was looking at this shortly before you joined. What we've got here is we've got a lot of retail money kind of focused on shorting the US dollar at this time. Like, and they've been doing so for a long time. So this has obviously been a very painful trade for retail, is trying to fight that dollar before it flips. And I'll tell you this, I want to just like clip this and come back to this at some point when you and I discuss it. But when you get a major dollar sell-off, this is all going to flip. That's my prediction. Is what's going to happen is all the retail traders are then going to abandon their dollar short idea and start betting on the long side of the dollar. And that will be a great signal, in my opinion, that the new dollar trend may have actually started. So I'm waiting for that. I mean, this sentiment stuff is something I pay close attention to all the time, is because, what I'd like to see, if I'm going to really start getting bearish on the dollar, would be look at your chart levels like 1.06. Let's get something like this happening, and let's go double check that same chart that we just looked at. And if that has changed colors around, then that to me would be an excellent signal that, hey, look, a new trend has started truly, and retail money is yet again poised to be on the wrong side of it. That is just day in, day out what we see. We can also, of course, go deeper. We can look at something I've been finding really interesting, which is actually, let's look at COT data history. For those who look at this stuff, this is fun, because what you see is this yellow line is institutional net positioning has been rising on the dollar here recently. So, I look at dollar bearishness a little skeptically, as you do as well. That key level, let's see, like prove it a little bit. But right now, institutional money still seems to be kind of flowing in the direction of dollar bullishness, and retail money seems to be still flowing in the direction of fighting the dollar uptrend. So at some point it will change. Institutional money has made a lot of money betting against, or betting in favor of the US dollar. So we'll see. But I think that's something that we regularly check in on. And just like how Bitcoin eventually started finally making those big kind of breakout moves, eventually the dollar will crack the other way. But I think it's one of those things. Dollar index to me looks innocent till proven guilty, right? You got a key level support here. We're in an uptrend. We'll see if it can hold. What are your thoughts on the yen pairs as well? Yen, very strong recently. Here's JXY, the Japanese yen currency index, just like the DXY, is trading up here recently. And most currencies getting a little beat up against the yen. Do you have any thoughts on these?
Yeah, so I'm actually long term, I'm very bearish on the yen pairs. So I'm looking for a really big sell off this year. And I'm just trying to stay patient and make sure I don't jump the gun. But more or less, we've had the same price action with all the yen pairs, which was the big kind of sell off in July, August. And since then, the market's kind of be slowly grinding up or sideways for most of the yen pairs. So my plan is I'm looking for that move to continue, really. And as long as we maintain this kind of corrective behavior on the daily chart, I do still see pound yen, euro yen, CAD yen, Swiss yen all falling, especially CHF JPY. I think that's a really interesting pair, because that one's actually trading at kind of all-time highs and has been doing so for a very, very long time. If I actually go to the monthly chart really quickly. So I do expect this one to drop pretty hard as well. These are the all-time highs here on the left, all the way back in 1979. And we've been trading past them for a while, and we're kind of losing steam as well. So this one looks like it's due a correction. And that's kind of the opportunity I'm looking to trade across most of the yen pairs. So I'm looking for shorts, but a lot of them have been a little bit tricky to trade. And it looks like we're starting to see some momentum come in now. So really what I'm looking for is just consistency, a nice, healthy, bearish move, impulse move. Then I'm looking for the correction of that and the continuation. Pound yen, kind of same situation there as well. If we can get a push and a continuation, I'm looking to follow that move to the downside. Dollar yen's the only one which I'm not looking too short, because actually on the daily chart we're actually pretty bullish still. We're still seeing higher highs and higher lows there, so I'm not looking to short this. And if we do see a rejection, then I may actually look to find some longs. But the rest of the yen pairs, I do think there's a pretty big move down this year.
Yeah, no, I mean, the yen has been really, really beaten up in the last few years. Take a look, for example, at the dollar yen. Obviously, this is one of the biggest winners, I suppose, against the Japanese yen. This thing has gone parabolic since 2021, where inflation kind of became a thing. And from a fundamentals perspective, if we start to see inflation materially cooling more so than we have even recently, this thing really could have some violent longer term reversals. The story that took us here seems to be changing. The Bank of Japan actually rate hiking recently. Meanwhile, other central banks globally are looking to cut rates. It gives me an environment where you could actually start to see some normalization of the Japanese yen coming down against other currencies, which on a longer term basis could lead to, a return to like levels like 140, 130 on dollar yen, which is, very far away. That's a lot of movement to the downside that could take place. So, we'll have to see where that goes. Okay, what about, we talked metals, we talked dollar, we talked yen. What about indices? Indices have had a crazy, period here. What are your thoughts on things like the NASDAQ or the S&P 500 right now?
Yeah, so I'm pretty bullish on the indices. Nasdaq and US 30 still haven't made new all-time highs. S&P did, I think, a couple of weeks ago. So I'm still favoring NAS and US 30 to go make their new all-time highs pretty soon. I know we had a kind of a weird drop on Monday. Price was very, very bearish. So we're kind of in a bit of a range here for NAS, but I still do see the bigger move as price takes out that high. And again, a great way to kind of just see what price is doing, just zoom out to the higher time frames. It's still a very clear-cut trend there. So naturally speaking, expecting another move higher. In terms of trading opportunities, it would be nice if price was to push back down to the low end of the range. That kind of maximize your risk reward. Find a really nice entry. You can have a stop loss relatively tight, and targets at the high. So that kind of makes a lot of sense. Right now, price is in the middle of the range. So unless you're kind of dropping intraday, it might not be the best time to be looking for trades. But direction speaking, I expect more upside. US 30 as well. I'm pretty bullish on this. Looking for price to take out the highs. We're very, very close to that. So again, this could be some nice intraday pullbacks for some more upside as well. S&P still bullish as well. This one did take out the highs not too long ago, but of course, in doing so, it creates some new highs. But because we have done that, I'm not as interested with this one. There is a bit of a gap which we may go and fill. But overall, I don't like this one as much as NAS and as US 30. But generally speaking, I'm still pretty bullish across all three of them.
Sure. Yeah, no, it's been an interesting environment for indices. You've had we're in earnings season right now, so a lot of stocks coming out and reporting their earnings. Yesterday we had a couple of big ones like Microsoft came down much lower here today, so you get a big drop in Microsoft, and then Meta ripping to the upside here recently, and then of course a favorite stock of mine, Tesla. So 4.55% to the upside here today. We'll take that. I'll give that. That being said, it's had a really rough couple months, so bouncing back a little bit. And of course that plays into the indices. For those of you who watch indices closely, I do think it's important that you stay up to date with what's happening on the kind of key stocks in the market, what's happening with them, especially like the Mag 7 stuff, like your Tesla and Amazon, Apple, Nvidia, all that stuff. So we'll see where those goes. Where those go. We've got consolidation here recently, but I would agree that the overall uptrend still seems intact until proven otherwise. So we will have to see where that goes. Last one. How do you feel about Bitcoin? I know we talked about it at the open, but from a technical basis, how's it looking currently?
Yeah, so Bitcoin's still pretty bullish, kind of intraday, intra week, but we still have that same obstacle on top of our heads here. which is that 107, 108K mark there as well. So I want price to break through that for me to get excited again, because although Bitcoin is very well in a clear uptrend here, if I expand to the weekly chart, it looks clear as day as an uptrend here. As we do approach that resistance, we may roll over again and just kind of prolong this consolidation. So that does worry me, that level. We could potentially sell off again. If we do break through and see a really nice close above, it could spark another bullish trend, something like this, another breakout. The next big kind of psychological level for Bitcoin would be 120K. I think we just shy of 110, but I'd say 120 is kind of the next big mark. Maybe we see a push in that direction. So generally speaking, it's a very bullish market, not really seeing signs of reversal. I think that's the key thing to note. Yes, we're kind of pausing here, but every trend has that time where we do pause. Doesn't necessarily mean that the market's going to reverse. So still very, very bullish. No kind of major signs of reversal. Maybe we stay in the consolidation for a little bit longer, but I do expect us to eventually see another bullish leg higher.
Sounds good. Yeah, no, it's been an interesting trend to watch out, and I think I'm with you on the 108 thing. It's like if we can actually break and close above that, we might be out of this this kind of choppiness that we've seen for the last few weeks. So yeah, gonna be interesting watching those highs close. Miko, I want to thank you for coming on. That's we went through our watch list here together, so no Marco this week, and we'll miss him this time around. But we had you to save the day, so thank you for coming on. Before we let you go, everybody who's watching, if you guys would like to check out Miko's YouTube channel, we just dropped it in the chat for you. Check out Miko Audu on YouTube. You can keep up with his analysis there. You can also find him on Instagram as well. So make sure to go throw him some love. And big thank you to him for coming on the show. Miko, have a great rest of your day, man.
Thank you. Take care.
See ya.
See ya.
All right, guys. Yeah, so we've got Bitcoin here, still holding on to some gains. We have Forex James coming up next, but he's coming in 15 minutes, so we'll take a look at some more charts here while we wait. So U.S. stock market looking pretty solid here today, up 0.3%. You got to think, a week ago, or I guess to start this week, Monday looked pretty grim. You had a big sell-off in names like NVIDIA. And then earnings season kind of kicked off. We had Meta, Microsoft, Tesla, like I just said, report their earnings. Microsoft was not, well, Microsoft beat on the top and bottom, but there was something in the report that they didn't love. I need to actually understand that, because let's see. Can we read about this? Let's see. Microsoft. So what did somebody help me out, do some research for me real quick. What about the Microsoft earnings did the street not like? Why did Microsoft drop 5%? You have, again, earnings came out better than expected on both the top and bottom line. A beat here in earnings, 3.23 was reported compared to the estimated 3.109. That's a pretty good earnings per share beat. I mean, 3.89% beat from expectations. Revenue also beat by just shy of $1 billion. Look at this. I mean, that's a crazy number. 69 nice $1 billion reported compared to the forecasted 68.9. So slight beat in revenue and in earnings, but perhaps there was more expectation than that. Yeah, really, really solid, overall growth, but still not enough to impress this market. I mean, at the same time, you had Meta, which beat top and bottom. I mean, look at the earnings surprise. Holy, I mean, there's no question why Meta's up. Look at that, up substantially in earnings per share reported compared to expectations. Very, very strong beat there for Meta. Revenue was slightly higher. So, I mean, what that tells you is not only did they up their revenue, but they increased their efficiency on revenue coming in. They made more money on the money coming in. That's exceptional. Meta has already been rallying off the idea that if large language model competition is increasing, that helps their business model because that is what they spend money on to build out their AI kind of algorithms that fuel Facebook and Instagram. So Meta just looks so strong. $695 per share. That's just crazy. Really, really an impressive company. It's an expensive stock, but it kind of deserves it. I mean, it's one of the leading AI kind of stories that actually seems to be taking AI and just straight up making money off of it. Think about what Meta does, right? Meta just utilizes all the AI technology to improve the efficiency of their algorithm massively so that it better knows how to target users on their platform for advertisements, which is a net win for advertisers spending money on the platform. It allows consumers to spend more time on the platform because the platforms are so tuned to what you like. I mean, that is AI applied right away, here and now, today. You know, people like to say like, oh, the AI stuff is a bubble, and it might be. Who knows? Maybe it's overblown. But and it will look overblown if you get like a recession or like a cool down in the economy, then everyone will say, oh, the AI bubble is overblown. But this is a company using AI right now to make a ton of money. So it's kind of cool to see. You know, you want more of that. Tesla is a company that I think is a little bit more speculative, but has the edge on robotics, has the edge on autonomous driving, has the edge on, I mean, their cars are pretty dang cool, right? So this is a company I've liked for a number of years. I've owned Tesla off and on in the account and traded it in and out several times. I continue to like the stock and continue to play it on the long side only. I've never shorted Tesla, and shorting Tesla has been a graveyard for shorts in the last few years. So these are a couple stocks that I like. The Russell's up 1% here this morning. This is great because I have some Russell sell put bullish positions on it. So we'll see. We'll see what happens with the Russell. I would love to see more upside for small caps this year, especially if the more accessibility to AI stuff means more accessibility to AI for smaller companies, for everyday businesses. If they can use AI more efficiently and for lower cost due to competition becoming more stiff, that could be a good thing for small caps. Nvidia bouncing back here off the lows a little bit, but still struggling to find its footing. I mean, it's flat on the day. You would have hoped that strong Meta earnings and projections for still plenty of spend on AI, that is not going away from Microsoft or for Meta. You would have hoped that could have gotten to get Nvidia to kind of make a little bit of a move north, but not really, not enough. I mean, Nvidia is just really under scrutiny of this market right now. How did semiconductors as a whole do? Let's take a look. Semiconductors liked it, up 1.8% pre-market. I have a position in SMH. It is now back in the positive, so we'll see where this one wants to go. But I own some SMH shares. Came down to a key level of support. I bragged about this here recently, but I'll do it again because you guys know I love to brag about winners. I talked about some losers today too. I got my oil position, which is kind of just complete dud today, but I actually sold out of SMH. So I bought SMH right around here, rode it up, trailed a stop, took profits, and then the market gapped lower on the DeepSeek scare. And then I bought shares in this area. So we're looking at a profitable position again on SMH, and I completely dodged this fallout. I got so fortunate with, I mean, I guess it's not luck, but I stuck to the rules, trailed out, and that ended up being an excellent, with hindsight, my favorite decision because I closed out of that trade right before carnage ensued, and then I actually got to pick up the shares at lower prices on what I thought was, and still do think, is a little overblown fear on the DeepSeek stuff. I don't think that that's going to just cold stop, kill the AI trade for semiconductors. Still think even if AI becomes more accessible because of the competition in large language models, now these stocks look good because there could be more accessibility to AI stuff, which could lead to more demand for chips. There's been some interesting theories tossed around about that. Just because you make a technology more competitive and cheaper does not mean it rules out. Think about, like, for example, flat screen TVs. They used to be really expensive. They've come down in price tremendously. That doesn't mean that the need or desire for those things went down. In fact, it probably went up, because now those things, like those flat screens, are more accessible. Everyone can have one. They're not $1,000 plus to get a flat screen TV. Now you can get a decent one for $300, $400. So it makes it more accessible. So the theory that, more competition in large language models means no demand for chips, I don't know that I buy that. And there's a lot of people who are much smarter than me saying the same thing. So that's the thought. Anyways, guys, we're gonna take a quick break. Up next, we got Forex James gonna be taking over the stream for me. I gotta run off and do a podcast here. Before I do, let me just remind you, if you enjoyed using or checking out some of the tools here during the live stream, you can use the same data and tools that I use to track retail sentiment, institutional money flow. I look at the top setups algorithm every day to find the trades that I'm taking, and all of our other data scanners, economic data, the U.S. economic heat map, all in a browser-based platform. It is currently and ending soon, a massive discount available right now of 35% off the product. And it's a one-time payment. No monthly fees, just pay one time, get access to the software, and you can start trading with it today to improve your fundamental analysis and get more insights on the charts that you know and love. Don't miss the opportunity. The link is in the chat here as we speak. Send us a direct message on this stream in the chat, or you can find it in the description down below, or you can head over to a1trading.com and click the chat with us in the bottom right live chat link. Anyways, guys, I'm going to take a quick break, and then up next, we got Forex James taking over the show. Stay tuned.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
Hey guys, how is everyone doing? Hope you're all good. Hope you didn't blow any accounts. We've had a crazy period recently. We had FOMC. We've just had some more US news. We've just had ECB rates. Crazy stuff. Although actually the markets aren't crazy. It's been actually quite flat. Bashi, good to see you again. So yeah, ECB, I would take that as more neutral to slightly dovish. Definitely doesn't really give me any hope in terms of any euro bullishness, especially in the long term. So I'm still quite happy to go into euro dollar shorts. But I am starting to consider, where do I want to start looking to go long? Because I think it's a little bit early at the moment. I don't think we're quite ready really for a reversal on euro dollar. I mean, the data just doesn't support that. But I think I'd be quite happy to start positioning to the long side of parity, and very slowly building up very small positions and just buying up euro dollar while it's cheap. Even if the economics are against me, I can day trade euro dollar shorts, and I can start building a long position over some time, positioning obviously for the long term. So I'm considering it. I'm obviously not doing anything yet regarding that, but it's just something I'm thinking about. Surge. That is my opinion on EU. I think we're still heading to the downside. The seasonality generally, overall, with the euro and the dollar is very strong until around March, and the euro is very weak until around March as well. The ECB sounded as if they're going to be continuing to cut rates. It was a unanimous decision to cut rates. This time they didn't really give much signals to change that perspective. They also said the wages are expected to continue to decline along with services. So yeah, generally speaking, the euro is still not in a great spot. We also had pretty poor data for Germany this morning as well. The US dollar, I would say that one is continuing to be bullish in my view. Don't really see any concern there, to be perfectly honest with you. It is early to buy EU. That's what I'm saying. I'm not doing anything yet. Just waiting. Godfrey, thank you. Good to see you. Manu, mood off. Not sure what you mean, but yeah. So I'm currently in a Nasdaq long. I'm still in dollar Swiss longs. New Zealand US dollar long is hanging on barely, and the pound dollar shorts are back to entry. So yeah, there's nothing going on really for me. I've closed out fully of all my CFD positions. So my euro pounds are completely closed out. My euro dollars completely closed out. So yeah, I'm just waiting for the full transition now. Alan, good to see you. Gold's about to break all-time highs. Interesting. We were looking at gold this morning, actually. Yeah, it is, isn't it? It's got some really good momentum, actually. Interesting. Unfortunately, I've missed this whole ride. I just didn't really find a good opportunity to get in. So obviously we had basically a range here. I mean, it's a big range, but for me, that's a sign to stay away from the market. So the only place I realistically could have taken this trade was within this level here. But there wasn't really a deep enough pullback into this previous structure for me to start positioning long. So kind of just watching on the sidelines, unfortunately. The Edge Finder also isn't very supportive of gold long at the moment. So yeah, not really had much of a reason to get in. Aviation. Hello. Well, good evening. Hope you're doing well. Sean, yeah, I'm here as well. So I was on my own stream and I got a message off the A1 guys asking if I was coming on this stream. I was like, oh. So I've had to run downstairs. I had a pie and I think it basically inhaled that pie and then ran straight back upstairs and got on this stream. Busy life of a content creator. So I'm just trying to think. There's not anything really that I'm looking at. Oh, oil's reacted nicely. I was looking at this on my stream, and I was considering it because I'm still relatively bullish on oil, but the risks are just too much of a risk for me to invest in oil at the moment. Because obviously we've got Trump saying he wants OPEC to reduce prices. We've got Trump saying he wants to drill, baby, drill. Obviously both negative factors for oil, but there's not been any action. Nothing's actually happened to reinforce those statements yet. So that's why I'm still leaning more towards bullish. I'd be quite happy really to buy here. Just not yet. I'll have to see how this 4-hour candle closes. We've got about half an hour. If we can see some sort of confirmation, and I'll be honest, I don't know what I'd want to see. Maybe even a daily candle close. But yeah, this level looks really good to buy from. I mean, previous supports very clearly here, and now we've had the break. We've come back down for a retest, so makes sense to look to go long, which is good because I was very patient with this market, so maybe it'll pay off. The Dow, I'm already in NASDAQ, but I would love to get into the Dow. I was talking about the Dow yesterday. Let's have a see here. I don't like where it is at the moment. It's just a little bit too high. I'd love to have, or love to see, a deeper pullback, possibly to this previous low. So this is around 43,900, 44,000, I'd say. So long position off here, back into the previous highs. Stop loss just below the structure, so something like this. We get a relatively good 1 to 3, I think. But I think I'm being a little bit optimistic, really thinking that we're going to have this large pullback. So if we don't get that, then there is nothing I can do in this market, unfortunately. Let's see what else there is. There's Bitcoin. I don't trade Bitcoin, though. Same with platinum. Oil's bullish. We've just looked at oil. However, oil and dollar CAD both being bullish tells me I don't want to be in both of these trades. So I'm quite happy to take either an oil long or a US dollar CAD long. Taking both of them, I don't think is the best idea. Because obviously oil and the Canadian dollar are heavily correlated. FTSE, I don't trade the FTSE. What else do we have? New Zealand, US dollar. It seems like the dollar pairs are back on shorts. Euro dollar's back, pound dollar's back, New Zealand, US dollars here. Yeah, I still like dollar cross shorts, and the yen. I've been saying that I think I might have missed a little opportunity on the yen pairs, actually. So I've been really disregarding them over the past couple of weeks just because I don't like the yen. However, it has actually presented some really good opportunities, and it has been pretty strong relative to G10 currencies. So I would actually quite like to just test the waters with a short, probably on euro yen, actually not pound yen. So with the pound, I'm a little bit neutral in terms of direction, whereas the euro, I am still more on the bearish side. So I would quite like to go short. I mean, there's two options, really. We've either got a rejection, lower high, continuation to the downside, or we've got the break, the retest, and then the continuation. So depending on which one we get, I'll either enter on the pullback or I'll enter on the retest. So we will have to see. In terms of targets, I think down here is quite reasonable at the previous low towards 156.5. I would lean more towards this first option of having a rejection and a lower high get printed. And the reason is because we've already got a oversold RSI. We're at the bottom of the Bollinger Band. We're at quite a strong H4 level of support. So as far as I'm concerned, rejection from here, lower high, and then continuation seems like the most likely situation. However, obviously, we'll have to see how this market goes. But yeah, I think that's likely how I'm going to approach this one. The euro went up despite the rate. So the rate cut was already priced in. It wasn't a surprise. It's been heavily expected that they were going to cut rates. The reason it went up and then went back down is because Lagarde sounded quite hawkish at first. It sounded relatively positive about the data and the situation. Then she moved on, and it actually sounded quite dovish. So she didn't say, but it was quite obvious that she was basically saying that they're going to cut rates again. She was saying that wages are very likely to come down. Services are also likely to come down. So yeah, it wasn't very, it wasn't great in terms of giving the euro strength. So that's why the euro went up and then went down. He finally wants the yen. I do. I'm a little bit late to the yen party, to be honest. I was a bit too stubborn on that one. But yeah, I think I might be changing my tune a little bit. Godfrey, the yen strength, it seems to be coming from the rate hike and a little bit of optimism around the yen. But to be honest, I still don't think it's a good currency to buy long term. I think further weakness is inevitable. But if you want to catch some short-term momentum, it might not be the worst option. Let's refrain from using support resistance. No. Because that is what brokers teach you to keep you losing. Close your eyes. Ball out, that's just not true. I know we agree and disagree on a lot of different things, but I'm going to have to just disagree with you on this one. The reason things work and don't work in the markets is because you have the self-fulfilling prophecy and you have herd mentality. So it doesn't matter what it is. You know, Powell could come out and just talk about bananas for the whole FOMC, but if every single institution, everyone says that's bullish, the market will be bullish, even though it's not fundamentally anything related to the markets at all. It's the same with support, resistance, Fibonacci's, moving averages, trend lines. It depends how many people are using it. I can show you examples now of Citibank using support and resistance and moving averages. I can show you one of Pickett Institution using moving averages and oscillators, supports, resistance, trend lines. It's completely fine if you don't want to use it, but don't say it's a trap, because it's not. No, brokers don't actually teach you anything. Anyway. Yeah, ball out, that's the point though. If it's herd mentality, it doesn't matter if you like it or not, because as long as the herd's following it, it's going to work. That's why you look at the monthly, the weekly timeframes, you'll see a very simple rejection of previous low or a support, because there's so many people, so much liquidity and funding looking at the same level. That's just how it is. And you can't deny it, because that is literally how the markets work. The markets wouldn't work if no one agreed on anything. You have to have buying and selling interest at the same levels. Otherwise, it's just going to be range bound. Ball out, you're not. I'm not trying to get into an argument. This is the last thing I'm going to say about it, but I'm going to show you. I'm going to show you something here, because I got into a similar situation with someone else. Yeah, right here. So there was this guy saying he trades like the banks. He teaches you, you know, his bio says trader mentor, teaching you real institutional trading. Bearing in mind, he says, retail, look at moving averages. When this is a Citibank document, they've taken a short position because of a resistance and a trend channel and a moving average. This is another institution that uses trend lines, Fibonacci, oscillators. And this is obviously just a MUFG report talking about macroeconomics. I know you're not talking about that specifically, but either way. So that's my last point. We're going to move on. I like ball out. I think he's got his own opinions, which is good. You don't want people to sit and always agree with you, but in this situation, I don't agree. Anyway, let's keep this gravy train going. So yeah, Euro's not doing much off the back of the ECB conference or release. Their statement wasn't really very interesting. The same with FOMC, actually. There was not really much going on. It's very dependent really on what inflation's going to come out as in the US. So lower inflation will lead likely to more rate cuts. Higher inflation will lead more towards a rate hold narrative. So we'll have to pay attention to what's going on with US inflation. Europe, I would say, is still pretty doomed, to be honest. We're going to have to just keep an eye on the general economy with Europe. The pound is in a tricky spot. I'd say it's definitely found some support. It's definitely doing a little bit better than it was, although it's still not necessarily something I'd want to buy and hold. New Zealand dollar, Australian dollar, I would also say are in a pretty rough spot. Yen and US dollar, to be honest, the only things I'd really be interested in getting into in terms of long side. Yeah, that's about it, to be honest. Uh, 150 grams of protein a day. I have no idea what I do. I'll eat some eggs, I'll have some steak, I'll have some veggies. That's about it. I'm quite happy just living life. I think I did that actually when I was younger, when I was living in London and I was a lot more focused on what I look like. I used to be very concerned with all my macros, all the nutrition and stuff in it. Didn't go well. I remember I fainted in the gym actually because I was on a cut and I refused to eat. And then I went to the gym, did cardio and back, and I collapsed in the middle of the gym. It was the most embarrassing point of my life. Yeah, that was bad. So yeah, I stopped doing all that. So all my focus now is on what P&L I've got, not what I'm eating. No, Bashi, I don't go to the gym anymore because I'm a bit chubby these days. I used to go to the gym though. Like I said, I used to live in London, so my appearance was a lot more important because I had to go into offices and meet clients and things. Whereas now I'm just talking to you nerds on stream, so it's not really that important if I'm a little bit chubbier than I was. Anyway, again, we're going off track, so let me just gather my thoughts for a second here. Let's see COT data. I've not checked that in a little while. Let's see what's going on. Amber, you want to go over NAS? Yeah, we can have a look at NAS. Just give me a second. Let me see what smart money people are doing, and then we can move on. Okay, cool. So gold's still very bullish, which is interesting. We've got Nasdaq bullish overall. US dollar's got some buying interest back. Yen also. The net positioning on the yen is still to the downside. Australian dollar downside. Okay. The euro's gone a little bit more flat. Still downside positioning, but not. Oh wait, sorry. Is that right? Yeah, still downside positioning, but not overwhelming. Okay, fine. Let's take a look at the Nasdaq then. I'm actually in the Nas, so let's. Yeah, it's just been range bound recently. I would expect it to continue up. This wasn't my trade. It was from my trader and elite traders. So I'm not really very well versed on what's actually driving the NASDAQ at the moment. However, he said something about earnings coming out, and that was about it. So I would suggest we're coming back up to the previous high, at least coming back into sort of this area, which is where we're currently looking to take profits. Although I guess the market really is just sideways. There's not really a defined trend at the moment, especially on the H4. So personally, the way I would approach this is either look for some day trade, some short-term positioning just to correct and fill into this market gap. And then oops, let me get rid of this box. From there, I would then be waiting to see if we can get a break and a retest of this previous high. And that's basically it. I don't normally try to overcomplicate things like the S&P and the NASDAQ just because these markets just drift to the upside. Obviously, they have downtimes, they have drawdowns and things, but if you just focus on going long, generally, you will have an easier time. So yeah, I just need to wait for some clear momentum and a clear short-term trend to capitalize on, and then I can start running it up. I'm worried about my future. Why is that? Not a single female in this chat. I don't really know any female traders, actually. I think this Tory. I think that's it, actually. I don't know any others. Yeah, no. But yeah, even my community is a little bit of a meat fest, to be quite honest with you. So don't expect much. How does your support and resistance work on one currency pair, e.g., let's say AUD USD hits a major support and has a big rejection, but let's say AUD JPY is dropping, will AUD JPY rise too? No, aviation, not necessarily. So the way I would look at that is what's the dominant currency. So for example, if in this case, let's say it's the US dollar, let's say the Australian dollar is relatively weak, but you're mainly going into Australian US dollar because of the dollar strength. Likely, it's possible you'll see a reaction on both, but I wouldn't say it's a huge deal. Again, pay attention more to the macros than the price action, in my opinion. Damaranian, the ECB basically was, I'd say, neutral to slightly dovish. In the first half of the conference, they sounded actually quite hawkish, but then they moved on to future rate cuts. That didn't sound great. They didn't say they were going to cut rates, but they didn't really have to. You could tell by the tone. It was a unanimous decision to cut the rates this time. We heard they were expecting wages to come down, expecting services to come down. They recognize there's still issues, although they seem to be on target for their inflation. So there's that. But yeah, I wouldn't say there's anything in there really to drive long-term buyers into the euro at the moment. Lauda, you're a female. Good stuff. We love diversity, which is contradictory if you're worried about minerals and vitamins. Macros. Sean, are you still talking about gym stuff? Oh, Kathy Lean. Yeah. You know, it's funny, actually. Kathy, what was it? There's actually, I won't go into it on the stream too much, but there's a Telegram group that's quite famous. It's an economics one. It just puts in news releases. And I found out recently all of their content is stolen from Kathy, and they've recently started. They've got like 150,000 people in this Telegram. So yeah, props to Kathy. Oh yeah, Karen Fu. Yeah, I forgot about Karen. Yeah, I know about Tori as well. Lane. Guys, I'm a little bit slow with reading, so I apologize if I mispronounce people's names. Anyway, what were we doing? We were just kind of killing some time, weren't we, really? So let me just see the time on today. I don't want to overrun. Okay, cool. I've got another 20 minutes roughly, so we can continue our little rambles. Is there anything you guys are looking at? What's going on? You misspelled the name. Bashi Karen. I don't actually know who she is. I've seen some of her reels or a YouTube shorts on YouTube. I think she just does content like the rest of us. Is that financial advice, James? Just go long. It's definitely not financial advice. Hi, James. Short New Zealand US dollar. Do you think there's more downside? Assad, I do absolutely think there's more downside. I took a long position just to hedge some of my US dollar exposure. But yeah, I would suggest that there's definitely more downside to come here. The New Zealand dollar is not really doing very well. It's not really on the list of to buy currencies anyway. The US dollar, I would say, has a lot more strength left in it. Just be very cautious, because I keep bringing this up, but you know, it's important to just be aware of. When Trump came into office, we had the initial dollar rally, which we've had currently, you can see on the current dollar index, followed by a 15.5% decline. And that was pretty quick. You know, it didn't really give you much time to get out of reposition. So just be very cautious of previous price action and pay attention to what's actually going on in the US. The current economic landscape at the moment is very different now to what it was then. So it's not something you need to be scared of. It's just something to be aware of. But yeah, New Zealand dollar, I would suggest more downside to come. In fact, the same with all of the dollar crosses, to be quite honest with you. NASDAQ to the upside, I completely agree. Telling the FCA, I had to redo some contracts. I've been doing that the past 2 days. It's been an absolute nightmare. Because my old one apparently was written okay, but it wasn't formatted properly to be in standards. So I've had to do that as a very fun project to work on. Having the time of my life just writing contracts. She is good or not, how that's going to change your life? Well, you never know, Manu. You can, things can change. You just need to find someone you resonate with in the industry, and you can learn a lot from them. Thoughts on DAX? Sure. Buy it. Yeah, no, I mean, seriously though, you wouldn't really want to go against this trend. This is really strong, actually. Yeah, I mean, obviously the ECB is in a rate cutting phase, so it makes sense. So to be honest, I'd just be looking for the next pullback. Whenever we have a move to the downside on the DAX, I would probably look to go long at some point here. Even a pullback to create, I mean, I don't think we're going to get a double bottom here, actually. So actually, I think I'd be more inclined to look for a 50% pullback here. Just looking at the momentum, doesn't seem to be slowing down. So I'd be quite happy to go in something like this and could just continue the ride the roller coaster. There's no point trying to jump off halfway through or trying to fight it. DXY and gold are moving together. They have become best friends. Yeah. Any clue why SXY fell? I've got no idea what SXY is. Oh, do you mean the index? Sorry, I thought you were talking about stock. Let's have a look. Let's get rid of the N. SXY. I mean, it's not. Is this what you're talking about? Because it's not really fallen unless you mean this move here. And this was the risk off move, I think. That's when we had the DeepSeek situation, when the markets decided to go a little bit hectic temporarily. So yeah, that was a very brief sort of risk off move in the markets. We saw the equities down, we saw dollar down, euro down, Swiss up, and yen up as well. But yeah, I wouldn't read too much into that. It was just a very quick sort of positioning in the markets. Oh, wow. NAS is in some profit finally. Been sat through drawdown all morning since 8 a.m. until now. So what's that? 8, 9, 10, 11, 12, 6 hours? 6 hours of drawdown. Lovely. Okay. Moving on. I keep getting notifications. Trump to sign executive orders at 3 p.m. It's like, go on. He's been signing orders for like 3 days, or since he's been in office, non-stop. I just passed my pilot exam. Wow, congratulations! That's huge. Actually, you know what? If I couldn't be a trader and I could do any other job, I think a pilot would be on the top 3 list at least. I've seen if you go on TikTok or Instagram Reels or whatever, you can find pilots that make videos when they're going through the sky at night, and some of the views are amazing. What about a lawyer? Yeah, working with a consultant, not a lawyer, but my consultant sends it to his lawyer that then sends it back to me. Okay, so what did I just say? Thoughts on GU, that was it. GU, I would also expect to continue to the downside. I mean, I'm already in GU shorts here, currently hovering around entry. We did reduce our stop loss, though, by about 50% before FOMC just to protect the position or to reduce risk. Looking really for this market to continue down to around 1.2. That's sort of the institutional target that I've seen thrown around quite a lot, especially in the bank reports. So quite happy really to just stay in shorts. We might get stopped out of this position. It's a very tight stop loss, really. So if we are stopped out, I'll just look to re-enter. I'm quite happy to continue dollar long positions. I'm now a pilot and a part-time trader. Though that's amazing. I'm really proud of you. Well done. I'm really happy for you. On SAS, you can now, as they signed on an agreement with Starlink to provide broadband on board. That's good. I'm sick of being on flights with no internet, or at least very bad internet. Yes, I'm looking at Eurodollar. I'm always looking at Eurodollar. So I'm just really waiting to get some capital out of one of my accounts into another one, and I can start trading a little bit more actively again. But yeah, I'd love to get in some shorts. Ideally, I actually would have been taking shorts on the FOMC, on the press conference. However, obviously, like I said, I need to wait for some withdrawals to arrive so I can redeposit. But yeah, the euro and the US dollar seem to be very opposite at the moment. We're still having rate cuts by the ECB, or by the sounds of it at least. It sounds like the Fed isn't going to be cutting rates until about June. That's from what I understand so far. So there's a little bit of a divergence there between the central banks. The Eurozone data is weak. Dollar is stable. The economy is doing quite well. So yeah, euro dollar shorts are a pretty no-brainer at the moment. Status for gold. Let's see. Yeah, gold's doing really, really well. As I was saying earlier, though, we did slightly cover gold, but the problem is Edgefinder doesn't really have a reading. It's actually more bearish on gold from what I've seen. And yeah, there's just not much to go from. I mean, if you look at the daily chart here, there is no significant pullbacks. There is nowhere really for me to get in, especially for a swing trade. So I've kind of just been kicked to the side and made to watch, which is fine, because again, I don't think I would have taken gold anyway. However, it wouldn't surprise me either way, actually, if we continue higher, or even if we continue lower from here. I mean, we are at quite a significant area of resistance at previous all-time highs. So yeah, we'll see. However, yeah, I'm kind of neutral on gold, really. Is it not better to just increase the SL back to the original on GE rather than re-entering if you get stopped out? Potentially. It depends what the situation is. I'll have to monitor it. I'm happy to increase a stop loss if we just need some extra breathing room, but obviously if there's a news event or something happens, I'm happy to just keep a reduced stop loss and limit the risk and re-enter at a better price. Yeah. So the way I swing trade is I tend to be quite aggressive with stop. Actually, I've got two ways, I guess. I either don't touch the trade, so I'll just stop loss, take profit, let it run, or if it's a little bit more of a tricky one. So for example, pound dollar and already had quite a relatively tight stop for me anyway. We also had FOMC come in, obviously, before, as I was placing the trade. So I didn't want to really have a huge stop loss like this and then have to sit through all of this drawdown and just wait. I would rather be in and out in this situation. So in this way, I'm quite happy to sort of just trail the stop and protect the position and sort of be quite aggressive. Whereas things like dollar Swiss, I'm happy to just let this one run. So yeah, there's a slight difference there. Yeah, I'm talking with two sides on gold. This is the thing. I could sit here and tell you gold is going to the moon. It's going up to 3,000. But I don't know that. I've got no data to support that. So what I'm saying to you is gold, it's very clearly got a lot of buying power. I am not going to be sat here saying gold's going to sell off because that's completely counter trend right now. So it seems based on the price action like it could continue higher. But what I'm also saying is that the data doesn't really support that, in my opinion. If you look at the Edgefinder data for gold, it's actually more of a bearish outlook. So again, it wouldn't surprise me if we come lower. And that's why I'm not trading it, because I don't have a very clear idea on gold. Panda's shorting gold. Good luck. I hope it works out for you. But yeah, I don't have enough really either way. I wouldn't mind really a short-term sell just to get out of this sort of overbought area we're in. But yeah, that's not really for me right now. I'm not shorting Bashi, no. So let's see what else is going on here. I've got about 10 minutes left, so if there's any final questions, let me know. Retail sentiment. Let's have a look at this. This is normally quite interesting. Very bullish on the S&P, very bullish on gold, very bullish on silver. That's interesting. They're very bullish on the commodities, except oil, actually. Well, actually, they are bullish on oil. Yeah, interesting. Okay. Look at the S&P. Okay. Yeah, to be honest, I'm not really interested in the S&P at the moment. Is it on the edge finder? I can't remember if it was. No, the S&P is neutral. It's got a reading of 4, so already that's an easy way to filter out a not great trade anyway. I suppose we could look for a slightly higher price to come and fill in the market gap. But yeah, in terms of a long-term or a swing position, there's not really anything here for me. I would possibly consider it if we could come lower into these lows down here. Then yeah, I might look to go long. But other than that, there's nothing that's worth my time here. I much prefer the Dow. I think the Dow has potential to be a great trade if we can just get an entry. Gold blew up because of the war in the Middle East. There's been no mention on the ceasefire and gold back several times. You know what, Lewis? That's true. Actually, I have seen a couple of bits come in about the war, and none of it's actually been very good. So that does make sense. Good to sell gold right now, but sometimes gold goes to the moon. I don't know. I mean, the gold shorts at the moment seem a little bit like hopium. You know, you're basically just selling resistance, which is fine. There's no problem with doing that. But I think, yeah, it's more of a gamble than a trade, in my opinion. Which again, if you're happy with that, then fine. But for me, yeah, it's not quite there. What's your opinion on prop firm account for a person learning to trade for 6 months? I think if you're learning to trade, a prop firm is probably one of the worst things you can do because you don't get anything from a prop firm if you're not profitable. I think prop firms are great under one condition, and that's if your strategy is fully optimized to pass a prop firm. So, for example, a pretty normal strategy that you would see people trade with generally won't pass a prop firm because the rules with prop firms can be very strict. Even small things like no adding to losing trades, or I know there's one firm that says you can't buy and hold a trade. You can't hold it until you pass. For obviously a swing trader, that makes things a lot more difficult. So you've got to have a strategy that is specifically optimized to pass those rules, and I think you're fine. But yeah, if you're just learning, stick to demo or a very low capital live account and just play around and test things. What do you mainly trade? How do you stay patient for a good entry when you swing trade? I don't know. I mean, I don't really struggle with that because I trade sort of two strategies. I've got a very short-term strategy, which is mean reversions on the 30-minute time frame. So I'm always, or most of the time, I'm already in a trade. So I'm happy to just wait, and you know, I can just do day trades. And if there's a swing trade there, great, I'll take it. If not, I'll wait. but yeah, patience and psychology and stuff, it doesn't really get to me. It used to quite heavily, but it's just something that comes with experience and understanding your system. So, for example, if you know you average 2 trades a month through every 2 trades a month every month for a year, then that's just what you'll expect. You know, you won't really struggle too much with dealing with that because you know that's what it is. Whereas if you don't have any statistics on your strategy, you don't have any data, you don't really know what to expect, that's when emotions start coming in, because it's all just random. Yeah, that's also true. It's easier if you're not relying on trading to pay bills, but on the other hand, trading is very addictive. The same chemicals or neurons that fire, whatever the scientific word is, that fire when you're trading are exactly the same ones that happen when you're gambling. So it's, people say, "Oh, I'm over trading. I get FOMO." Likely, I'd say a large majority of them are actually addicted to trading. It's not really a psychological thing of just get off the charts. They are actually addicted to trading, which is why some people just can't trade, because they have addictive personalities. I do trade the DAX, but not very often. I'll go in for a swing trade now and again, or a day trade if there's a good opportunity, but I don't pay attention to it on a day-to-day basis. James, who's that wants to learn from a prop firm? Why not try baby pips? Yeah, if you want to learn, good. I'm saying if you're trying to learn to trade, prop firms are a bad idea. We've done gold already, hacks and veiled a couple of times. Oh, sorry, Nicholas's Adventures. We've done gold, but essentially, I'm relatively flat on gold in terms of direction. The momentum tells me that we're going to continue to the upside. I don't want to fight the trend, but the data currently. Oh, actually, hold on, it's slightly changed. Oh, maybe. I mean, it's still neutral, but it's not as bearish as it was on gold. Oh, actually, this changes things a little bit. I wasn't really paying attention to what it was doing today. If we get 1 or 2 more checks into the bullish categories, I might start paying a bit more attention to what gold's doing. So to be honest, from here, I think some sort of either higher low, something like this, or a complete retest of structure, and then continuation would be fine. I might start looking at it then. But yeah, that's basically it, unfortunately. I have 2 trades with good setups that fit my approach. How should I decide which one to accept? Well, you've got a choice. You need to work out how correlated are they. So if they're 2 completely different things that have no correlation, just take them both. Or if they are correlated, just flip a coin, or choose half risk and take them both. So both trades will equal one trade's risk would normally be. It really depends how convicted you are. I need a bit more detail on the trades. Is true there are many systems available to be a trader? If yes, then why so many fail? People fail for all sorts of reasons. You basically got a lot of children teaching children in trading. So you've got people that can't trade, but will watch, some of ICT's videos. They'll watch all 100 episodes of 40-minute things, and then they'll be like, I can't, it doesn't actually make me money, or I can't do it properly, whatever. But they have the knowledge about the system, really, so they'll just make a PDF and sell it, and that's their way of making money from the markets. There's people that just don't put the effort in. There's people that try and sell, like gold now. People try to sell this because it's resistance, it's human nature. Sell high, buy low. It's all sorts of stuff. But yeah, I mean, I could make a full 20-page document on why traders fail. I expect EU to move to weekly open price from here after balancing the ECB announcement of USD data. Yeah, possibly. Yeah, I don't know, to be honest. As I said, I'm actually pretty out of the markets. I've got a few swing trades on, but they're very, very small positions because all my capital is currently in the air. On the on the phone with the FCA. That's rude. Godfrey, you on pound Australian? Okay. Let's see. Definitely makes sense for this market to continue to the upside. I mean, the weekly trend is up. The daily, I'd say, is up barely. You know, it's quite rough. The H4 clearly is up. The H1's up. Yeah, so I think very simply, just look for the next pullback. So whether you use the 50% or you just look for a complete correction, whatever you want to do, just look for some sort of entry criteria that fits the way you trade. And yeah, I'd be looking to go long from there. Actually, this looks quite good. Look from here. Yeah, something like this doesn't seem too bad, actually. In terms of the economics, the pound, as I said, is more bearish to neutral, I'd say. Australian dollar, I'd say, though, is more bearish than the pound. So I'd be quite happy to buy this market at slightly reduced risk and just see how it goes. FTSE, it's the worst market available. The FTSE is just, it's horrible to trade. The only thing really I've seen on the FTSE in, I'd say, the past 2 years has probably been this break and retest. This has been the most clear move I've seen on the FTSE in a long, long time. I would actually, I'd be looking to short the FTSE, to be honest. I don't know where and I don't know how. I just don't think it should be where it is at the moment. So we saw the FTSE gaining on the back of lower inflation in the UK, which obviously signals that we're likely to have rate cuts by the Bank of England. So the FTSE is doing quite well. However, I don't know how long it's going to last because the FTSE's market behavior is just very range bound. We can have moves that are quite long. You know, you have this downside here followed by quite a long upside, but generally speaking, this market doesn't do anything. It really is just a sideways mover. So it makes me quite inclined to just trade it back into average price, just looking for some sort of daily mean reversion. Now, because it's not a currency, it makes it much more difficult. So to be honest, I don't think I actually will do this, but I'm just sort of thinking out loud here. But yeah, to be honest, if you want my normal thoughts without me trying to brain dump or whatever you want to call it, I think just look for a pullback, continue. I think this actually looks fine. It's very simple. Follow the trend, follow the momentum, and yeah, this looks very straightforward. I have a strategy, but don't know how to approach optimization. There's 2 ways to do optimization, and I would suggest doing the forward testing or live testing. So do it on either a very small account, so something like $500 if you can afford to put that at risk. That way you're just more inclined to actually trade it properly and take it seriously. If you don't have that, then just use demo, but you need to use live markets because back testing is fine. You need a lot of back-tested data to know if a strategy works. But the problem then arises in human error. It's like, oh, I actually wouldn't have taken that trade, or I would have actually entered here, or I would have trailed stops doing that, or I wouldn't have done this. And if you do that enough, that really, really messes up your data. So if you're trying to optimize, I would definitely say do it on live markets. And journal your trades, and then look back. What's the common theme between your losers? What's the common theme between the winners? Increase whatever is helping you win. Obviously, decrease whatever's making you lose. So yeah, it's simple, but it takes time. Yeah, grids, I agree. FTSE's a mess. Yeah, backtesting's good to get an idea, and this is just my opinion. Obviously, everyone's different. People's brains work differently, but backtesting is good just to test a concept. If you want to try whatever it might be, just get a feel for it, see how the market moves and all that sort of stuff. But to actually know if a strategy works, you kind of have to just live test. Because the thing is, backtesting is great, but there's a lot of small problems, and all those small problems can eventually lead to a completely thrown off model of what your trading strategy actually would be like. Because obviously it's not good for us to sit there and be testing. It's like, oh, this strategy is just maybe 5% in a month. This is perfect. And then you go through a 10 loss streak, obviously on backtesting software, and you're like, maybe I wouldn't have taken that trade really. Or, I actually would have decreased my risk after a winning streak, blah, 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 blah. And it gets in, you end up losing your own mind, essentially. You know what I mean? So yeah, backtesting's good, but it's not the holy grail, I don't think. And again, it depends how disciplined you are. For me, it's not the best, but it's all up to you. Honestly, I think live test is better than back test. What do you think on that? Yeah, I agree. Yen pairs, I think, I don't know. I'm a little bit mixed on yen because it's very clearly doing well. I don't think anyone can disagree with that. The problem is I don't know how long it's going to last. So I would actually I am tempted really to go in for some long positions on the yen. So things like euro yen short. However, the trend is still to the downside on the yen. We've created lower highs very simply. We are coming up to an intervention, very likely coming up to an intervention by the MOF. It seems like the Bank of Japan is going to hold their rates on the next meeting. So I don't know. The economy still isn't really in a great spot. So yeah, I think short-term positions, buying the yen is okay, but I wouldn't really be positioning any swing trades on the yen at the moment. You think gold's playing with you? Let's see what gold's doing. Yeah, see, we just had a very clean break. So sellers here are now sweating and they're praying and they're on Google. What's driving gold? I remember I used to do that. I used to go on Twitter and type in the ticker of whatever else I was trading. I used to look at what everyone else was saying so I could feel better about my positions, whether it was good or bad. Looks like someone might be coming on here. I think I missed a message. I wasn't looking at Discord. Yes. Chris is here. Okay, my bad. I ran over. I had Discord muted. Guys, my time is up here. Chris is coming to take over the show. My apologies, Chris, if you're watching this. I didn't mean to run over. I lost track of time. Guys, have a great day. I will see you probably next week. Don't get margin called. Have a great weekend. See you very, very soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Oh, welcome back. So we have some earnings today that I want to take a look at, and didn't have a ton of movement. So Tesla, there's your earnings candle, fading a little bit to the downside, but not nearly far enough. So I had trades on Tesla. I've been having some difficulties with my Tasty platform all morning. The option chain and just everything is being really, really wonky, which is unusual. But it's like always recentering, and it's driving me crazy, and it is really pissing me off. So anyway, I will spot check a couple things, but I'm just going to end up getting on support with technical support after the session and seeing if there's anything I can do to troubleshoot this. I've already restarted the computer. It's Tasty Trades desktop platform right now. From what I can determine, everything else is running nice and smooth. Long story short, it doesn't matter. I'll still, like I said, my parting gift for the day, considering the platform frustrations, is that I'm up to a fresh high for the year, which would give me out of the gate so far. I'm up 21K today, 124 out of, so I'm up 4.7% thus far, not too shabby. So keep an eye on that. Anyway, Tesla had earnings, as did Meta, as did Microsoft, as did IBM. And Microsoft is going to be a winner, even though that was a tiny little amount. I do want to take a fresh trade on Microsoft or look at one. I have this little tiny 23 cent broke wing butterfly with a trap that was anticipated if we pushed up to 470. We had a slight beat on both sides, so earnings per share and revenue was actually positive, but why did it drop? Let's find out. Can Tesla becomes the world's most valuable company? Well, we'll find out, won't we? Strong buy despite slowing Azure growth. Azure. But they're moving. So anyway, Microsoft's looking good for profit. Meta still has room to move for tomorrow. I need this to get above 702.50. It's at 704.96. So let me have a quick peek at Meta. Right now, trade. Baidu. Let's go to Meta. Come on. And this is what I'm talking about. There's my trade there on Meta. So I put in the 702. So what can I close this whole trade for right now? Let's find out. Max profit on one side is going to be $2.50. So the trade itself, I paid. Let me see what I paid for it. I paid $1.33, and it's currently up about 20 cents a contract. I can do nothing and just see if it gets above 704. If I want to be a little bit more conservative, if we come back in and fill the gap, this is probably not the best thing. But if I did this where I take the profit on it today, I might just grab the 20 cents and see if we don't have a huge overreaction. I might just grab the 20 cents. So we're trading $1.33. Right now I can close. Oh, you got to be kidding me, dude. Just like that, 50 cents. $1.50 to $1.30, just like that. Son of a biscuit. Let me see here. Let's see what we've got going on for the day. Can we get up to the highs at 710? See if we get back to those highs. My concern is that we come back into this yellow box, which is where I need price to stay out of. I need price to get above the yellow box or below the yellow box. In between is my max risk, which isn't a ton. It's $1.33 max risk. So it's not a deal breaker, but this is obviously a large area where I'm looking for earnings to either go up or down, and in the middle, that's my risk. So I may be looking to protect early. Looking a little bit better here. Let me see if I can just get a buck for it. I'm just going to take a break even on this trade. And I've been fighting this platform all morning. Trading at mid price at $1.35, $1.38. See if that one gets filled. Come on. $1.43 mid. All right, I'll let that one sit for a moment. If I go $1.35, that's at least break even. Just got filled for $1.40. Okay, so that trade's out. New trade on Meta. That one is posted. IBM's posted. Microsoft posted. Meta posted. All right, let me do an update to this one. So I'll do a reply. Trade management update. Meta. Earnings play. Paid $1.33 debit for both sides of earnings, which is a bull call spread and bear put spread. Closing at $1.40 credit for small win. Okay, so that trade is a small win. So that trade's done. All right, Microsoft. This one is probably like a 99% chance of profit. We're just going to keep the 23 cents. I'll do a quick update on that one as well. Microsoft. Apply to this message. Trade management update. Microsoft. Earnings play. 23-cent credit on broken wing butterfly. I'll let it expire for full profit. So it'll trade at a 0.0 debit by Friday expiration. Okay, so I got that one. I do want to take a look and see if I can get another trade in. This should have jumped the IV for Microsoft. So I'll take a quick peek at that. Yeah, this is going to drive me crazy all morning. I tend to operate a little bit faster than just watching a broker platform be all glitchy on me. Meanwhile, I've got a bull put spread in on SPX that is 3 points away from a threat. Fill the gap and bounce up. Don't be an a-hole at SPX. Everything's up today. China's up today. The trade I took on Alibaba looks pretty good. I'm going to look at another trade for Microsoft. I'm looking to fill in some of the gaps here. So I don't necessarily want to go all the way out to May, but February, March, April, these are all monthly expirations. I'm going to try to do a fill in here by maybe 45 or 60 days. Let me see if I can find the levels that I want. I like the 370 area for like a ratio spread or some income. So let me take a quick peek at that. Also, not that this is going to be fun for me to trade it, but if we are breaking below in the futures market, this might be a good time to look at a little breakout trade. So we've got some chop here this morning, big fake out right around the open, and push. I mean, this could be pushing right back down towards FOMC lows yesterday. This is where we had a bunch of noise yesterday during FOMC. We could just be in for a gap fill today. Like it's a pretty choppy market. So I'm not going to jump into futures yet, even though we are getting a pretty fresh breakout. If I was going short on futures, I like this previous low from yesterday around 21,390 on NQ. And if you'd go in that ES, that'd be 60.45. But if we're just coming back in to tap the gap and have some intraday noise, then fine. But SPX is 60.20. I could see that being a bounce today. SPY, I talked about this all day yesterday, 610 on the upside, 595 to 590 on the downside. We do have PCE tomorrow, so we'll see if today's price is still like somewhat resilient. I thought earnings would get the market moving a little bit more than it did. So far, it's been pretty calm. I was going to keep an eye on this like 604, 605 level on SPY, 6050 level on SPX. But Microsoft, let me see if I can fill a gap in here. IV should have been jumping up with that earnings. We're up to 28.1. I can fill in the gap here, so I could do March 14th. I could probably put a March 14th in. That's pretty decent expiration. I like that 43 days out. Issue here is, do I get enough premium on it? 43 days out. And this is the garbage I'm talking about with this platform today. There we go. All right, 43 days out. So let me flip this around. How many strikes do I have? Doesn't look like I have very many, but I do have the deltas that I want. I could do a 385 by 380. 380 with 2 contracts. That's not bad. So about a 93% chance of profit. Maybe a 14% chance of assignment, but probably less because I take these shares. If I was assigned at 380, 380 minus 5 minus $1.77, I'd own shares at 373. 373 from current price would be another drop. 373. We'd have to drop 10% additional on Microsoft. So I think this indecision area is, holding pretty nicely. This 200 moving average, I think Microsoft is hopefully staying bid, but a 317 expiration. I like that for about $1.70, $2.80 income. So I'm going to try to place that trade and keep the frustrations to a minimum. So I'm looking at a ratio spread. Let me see if this is any better than doing a 1-1-1. So if I take the 380, go back to 1 contract with that, and then put in a 375, and this would be a 1-1-1 trade. If I can frickin' do it. There. So $1.22, slightly higher probability. I think I'm going to take this trade here. So it's a 1-1-1. Now if I took the assignment, I'd be assigned at 375 minus 5 minus $1.22. Now I'd own the shares at 368. That's even lower. I'm going to take this trade. So hopefully $1.20, $1.22. Let me see if I can get filled for $1.20. And even with all the glitches in the world, still going to place a trade. See if it'll fill. Filled. Filled. Okay, $1.20 got filled, no problem. Similar order. Double check and make sure that account got filled. For $1.21, very nice. Similar. Okay, 2 more accounts. Okay, so go that account. Filled. And 1 more trade here. This will be this one. Buying power reduction 4. This is not portfolio margin, but I'll take the trade. All right, so that trade's in. I'll get that posted in Pulver Alert. So I'm going to put that in my personal tracker first. So just in case you're wondering, like, what, if it looks like it's all glitchy, it's just my desktop platform. Everything else has been totally fine. So Here is Microsoft. Say 111 and all margin accounts. So it's a sell. So buy put at 380. Was it 380 or 385? 385. Okay. So buy at 385, sell put at 380, and sell put at 375. $1.20 credit. Willing to own shares. And that is a 3/14 expiration, I believe. Correct, 3/14 expiration. All right, that trades in. Let me get that into our Discord. So Pulver alerts, there you have it. I'll throw that in Discord. I'm going to add this in and sprinkle it into my little income game that I'm trading with Microsoft. So 3/14 expiration. Buy the 385 put, sell the 380 put, sell the 375 put, $1.20 credit. Okay, so let me grab a screenshot of that. There we go. And I'll highlight the one that I just took. So there we go. Get that added in. $3.14 expiration. Buy the 385 put, sell the 380 put, sell the 375 put, $1.20 credit. Willing to own shares, but unlikely assignment. 95% probability profit. Okay, so we got that. Copy the screenshot, and we're posted. Hooray. All right, let me do a quick check on my SPX. I seem to be operating at a 10x speed compared to my broker platform this morning, which is not fun. All right, let's go. There we go. Positions. So the dollar credit trading for $2 from it looks like it. Sorry. I'll get out of this platform so I can just go back to the charts. There we go. Is that right? We're still trading at 210? Come on, jabroni. We're trading at 60.55. All right, I'm keeping an eye on that trade for right now. SPX 60.50. We filled today's gap, bounced off of that. Let's see if this is down, gap fill. If the bulls get back to the highs today, that'd be fine. Okay, let's go top down. SPY. So for the week, here's where we're still at for the week of trading. We obviously had that big disruptive gap on Monday. This is our gap fill. The market came very close to hitting that this morning. We had previous gap levels as well. I'm not sure if that's acting as resistance today. But structurally, I mean, I thought, okay, if we're going to do a full gap fill to the upside, that's 6,100. This also is all-time highs, which we poked last week. So we'll see what this market is made of. But for the week, we're still red, even though we spent Monday retracing and repairing. FOMC yesterday was pretty resilient. We have PCE tomorrow. Earnings for the most part, I'm sure, are steady. But if we go to, Microsoft beat on top and bottom. Meta also beat on top and bottom. Tesla, I think, had a miss. So Tesla missed both top and bottom, so earnings and revenue. But Tesla gapped up and it's flat right now. We're going to see if there's some follow through on Tesla by tomorrow. But this was expected to be like a $40+ move, and it's moved maybe like $20. So that was a 412. It's currently $3. I mean, it's like a $15 to $20 move, which, that's the coin flip with earnings plays. Is sometimes they move a ton and sometimes they don't move at all. And there's never really a perfect answer of like, oh, I should just sell premium and get that IV crash. It's like we see a lot of moves that are very directional and it's way beyond expected moves. I would imagine today that UPS is way beyond expected moves, right? This is at 134, trading at 111. Like UPS is getting smoked right now, and they had a miss in revenue. Now, why is this stock so crappy? I don't know, but I will say that if UPS comes down into anywhere near this COVID crash low, I'm going to buy me some UPS. And realistically, I can probably take a trade in this stock where I'm going to make sure it's not overvalued first, but let's try something like this. Let's go to Simply Wall Street, take a look at UPS. And okay, so they have some risk. Insider selling, profit margins are lower, high level of debt, servicing the debt's not great, dividend not well covered. But price to earnings ratio is below the industry standard. Earnings forecast to grow by 12% a year. I know logistically they have some liabilities when it comes to their employment side. I don't know if their drivers are union. Okay, so we're trading at 111. Fair value is 119. That would be enough to keep me out of it for right now. But I will say this: if the IV is high enough, and here we go again, buckle up into the vortex of sucky desktop right now. I want to see what the IV rank is. 52.2. Okay, good. If I was interested in taking any shares, I would say, look, I'll take a stab and see if I could own this around $90. Right, we're trading at 111. We've got a high IV. Could I do any type of trade that gets me some type of bounce around this like 90 to 95 level? Possibly like the COVID low is 82. So let's see what it looks like. So here's the options chain, March 21st to April. Not awful. April might be doable just for a little bit more premium. And lo and behold, nope, it's not even a trade. And why do I say that? Because as soon as I go down to the levels I'm interested in owning, the premium just disappears. So if I'm doing something now, it's fine. But I'm doing something where I want to own it, like ratio spreads, it's awful. So I think I'm going to wait and see if price just naturally falls into the 90s, and then I will revisit this trade. So that's it. Okay. Cold says we are union. Okay. Well, that has always been a bit of a pull on the stock. The reason that FedEx looks a little bit better compared to UPS is they don't have the same type of liability when it comes to union and drivers. So they're going total opposite directions right now. UPS does not look good. But like I said, I would bargain shop UPS. I love UPS. It's always a fun day getting a delivery on something. But I would say if this comes back down to COVID lows, I would take some shares. I would do something to look for this thing to bounce. But the stock itself from these recent highs, it's down over 50%. So again, we talked about this late last year. I've talked about this for a while. Quality over quantity. So if I'm willing to put some ownership of a stock in my portfolio, I do want that to be a quality stock. And performance-wise, I certainly don't want to see something as a stock picker. If you are a stock picker in 2025, if you pick the wrong stock, okay, you can see stocks that are down 50, 60, 70%. All right. I listened to an interesting podcast yesterday with Mike Wilson from JP Morgan. He talked about in 2022, and nobody would believe this because the market was, clearly a bear market, like 20 to 30+% corrections. But in 2022, the market actually broadened out. And the definition of broadening out, you'd think, is okay, if everything's going up, like Mag 7's been performing so well, everything's broadening out by, okay, Mag 7 just stays resilient, but everything else gets more bullish. Well, it could also broaden out the other way, which is everything that has $0 in it and nothing is moving, all of a sudden prices start to fall, right? Guess what happens? All those stocks that have already been beat up so badly, they're not getting beat up any worse. And so people start putting money into those stocks because they're considered value plays. Instead of dropping more and dropping fresh, that's how the market could broaden out as well. So we can have a broadening with a bearish move just as much as we can have a broadening with a bullish move. And I think that also adds an interesting element to this year's market, that we could broaden out with a downturn because all the stocks that have been underperforming just they don't continue to underperform. Like it'd be the Mag 7 that underperforms, and everything else that's been beat up and now it's considered value is possibly getting some flows into it. So thought that was an interesting angle, which does make a lot of sense because it's true. If you look at like Meta during 2022, it was down. Like this is a stock that has hit all-time highs and has been this like gangbuster rip to the upside. It was down over 70% in 2022. So yeah, things can get really gnarly out there. But anyway, all right. So UPS, I want to take a quick look at it. I can't do a trade that allows me to put in some positions where, I'd have a high probability of profit. I like ratio spreads. I like those 1-1-1 trades, but I'm not going to get the premium that I want. So I'll stay out of it. But I will go ahead and set an alert around this like 95 handle. Of course, I'm out of alarms. That's awesome. So let me just drag this down to, let's say 90. I'll drag it down to like 92. So I've got an alarm on it already. I can't even do it. Whatever, dude. All sorts of fun stuff today. All right, let's keep going. So we've got this. The index is clinging to some gains today. SPX up 0.25%. NASDAQ kind of flat. We've got equal weight up. This is nice. All right, we got equal weight doing a little bit better. S&P equal weight 0.95% versus the SPY up 0.25%. We have equal weight NASDAQ up 0.85% versus QQQ up 0.17%. The Dow's at 0.32. The Russell's up a decent amount at 1.3 or 1.33%. I do have some trades on Russell. So the right there, the March and April, or the March and May, and so far looking pretty good. Volatility on the day is still down. Volatility one day is still down. SPXY, should I bought that on Monday? Yeah, I'll wait. Dollar index. Let's go to the daily time frame here. Dollar index. I'm just kind of automatically linking dollar index and US 10-year. If the dollar can go lower, US 10-year can go lower. It's probably a good thing. This morning's currency strength was all Japanese yen. There you go. So I mean, not like a 160, 170 on the volatility side, but still, this is now in the last couple of weeks, we've probably seen 2 or 3 days where the Japanese yen is by far the strongest currency pair. Right. So I would not mind seeing some weaker dollar. I certainly wouldn't mind seeing some stronger yen just for some of the trades that I'm in. But I'd also like to see a weaker dollar for a softer US 10-year. Tomorrow's PCE data may move the bond market a little bit. I still like bonds long, at least for a trade into 2026 or 2027. That would be a flight to safety. Look, if the US 10-year yields, by the way, if the 10-year yields are not going to go lower, there is a bit of a pain point between this like 4.5 and 5%. This is going to be a no growth environment or a slow growth environment. Okay. So if we start pushing up higher, this is ultimately, especially if we cross over 5%, the reason I say here something will break is because if you could have a bond investor pulling 5% yield with essentially little to no risk. Okay. If you go back in your money markets, your certificates of deposit, people can part ways with liquidity for 6 to 12 months in order to get a low risk yield, right? So if it was zero risk or low risk, there's no such thing as zero risk. But if you could pull in 5% on a little to no risk play, a lot of people would be considering doing that. And that makes bonds or, CDs or money market instruments very attractive. So that is the other thing that happens where we get like a big liquidity drain out of equities because it is way riskier to be in equities as yields and bonds would be offering such attractive rates, So I do think that if this goes lower, then equities looks a little bit better. If this goes higher, then we talk about, I think this is why I like bonds. Okay, do I trade Canada 60? No. Nope. Mostly U.S. equities and options. Okay, futures market. Still looking at some commodity-based stuff. Is this thing moving? I don't know. I don't want to throw a trade in there. DBC is still not moving. Credit spreads are still relatively tight. Jobless claims. China. Not really a lot of reaction today in China. Alibaba. So bought the shares at 85.50. Bought the shares yesterday in session at 99. We're up to 101 right now. I think there's room to run. I want to let Alibaba run kind of uncovered. I do have a covered call on Baidu. It's covered at 95. I actually might look and see if I can roll this right now. Let me see. Again, back to my broker platform. It's like my least favorite thing right now. Alibaba. Positions. IBM blasted up to the upside. They had earnings today. They went way higher. I was considering a fade on that move. I mean, I don't know if there's a bunch of momentum behind it, but I was considering a fade. I'll take a look at that one today. I just trying to keep the navigation to a minimum because everything is just kind of lagging with my platform here. So Baba, I want to go to Baidu is the one that I have shares of. So Baidu trading at 93. There's my 95/70. Let me see if I can do a roll on this one. So if I can roll the shares, so what I'm going to do is roll my collar. February 21st is the expiration. I still have a bull put spread out to September that's looking pretty good for profit right now. But the 95/70 is my collar trade. So I sold the 95 call, bought the 70 put. What I'm going to look to do is see if I can roll this. And hopefully this is going to give me some credit. So if it rolls out to the end of February, I get 35 cents. I might go ahead and roll this out to March. So March 7th, let me go to the main expiration on the 21st, 14th, March 21st. I think there's earnings on Baidu. That is the 18th of February. So I'd have to deal with earnings. And earnings obviously can be positive or negative. This might still have a lot of choppiness here. But if we're, up and down, like fine. Or we just have this thing starts to go and I don't know. I mean, all of a sudden, if the play is China tech and the market starts running with it, then I'm going to try to do my best to stay out of the way. But if I've got it covered and I roll it out, grab a couple more bucks, let me see if I can roll this out and up. We're hitting 60-40. Gosh darn it, dude. Come on, gap. All right, I'm just watching this level here. So we are coming back in to officially close the gap. Now, are we going to bounce? Taking on some heat if we don't. So I'm going to keep a close eye on that one. Let me set a chart alarm at these lows. If we take out the lows, that is no bueno. At least for an intraday trade. All right. I want to take a look at that roll. So if I roll it out, jeez, oh Pete's, dude. This platform is absolutely driving me crazy this morning. So I've got the 95/70. I'm looking to roll it out in time by another 30 days. And I'm going to try it. My goal would be if I can roll this up. Oh my gosh. Okay, if I roll it up to 100. And I roll it down to 75. Come on. That's still a debit? Really? Let me see if I can do this to 70. That's break even. So I can move the strike up $5. Doesn't really cost me a lot, but I got to change my. All right, maybe I got to move this down again. So I get $5 more of credit. I get 10 cents more credit. I get $5 more profit net. I can roll this up to 100, roll the put to 65, and I can still pull in like 5 or 10 cents credit, which essentially makes it a free collar, but I'm adding $5 of profit to my bottom line. So we're trading at 93.29. I go from a $95 call away to a $100 call away. That's okay, and that's on the higher end of the expected move. The hard part might be staying ahead of this thing. You know, like if this is going to run higher than $100 in here, like getting a call away at 100, I get a lot more profit. My break even's in the 80s. So obviously I'm trying to go after the biggest win I possibly can as far as, making money on the trade, make 14, 15, $16 a share. I'm okay with that. But got to keep it close. So I might consider this one. So if I roll out to March, roll it up to 100 and roll the put down to 65, I can get 5 or 10 cents credit. Let me see if this will actually take. Might take me all morning to fill these freaking trades, but let me see. 10 cents credit. Survey says 12 cents credit pending. Replace. Try 11 cents. $0.11 not filling. 10 cents. Come on, man. I mean, it's worth $500. It's definitely worth considering the trade. So I do want to consider the trade. So I'm okay going like 9 cents or 8 cents as long as the collar is basically paid for, or it's not going to cost me anything. I don't want to do a debit to do a collar. I don't want to add it. So 10 cents not filling, 13 cents mid price. All right, I'll go 9 cents. Worst case would be like down to 5 cents. Try 9 cents here. Try to get filled at 9 cents. So not filling. All right. Just going to see what price I get filled at and how long this takes. Try to go 8 cents. I mean, come on, dude. 12 cents credit. Give me some fills. Like I said, I'll take this down to 5 cents, which basically makes it a free roll. I don't love that, but I'm adding $500 to the bottom line. So I'm trying to get it rolled for another 30 days. All right, that's not filling to 7 cents. I'm just going to go to 5 and hopefully that will fill. $0.05. Mid price is 14. Come on. If that doesn't take, then I'm not going to bore you with this, and I'll just try to do it separately. So I'm looking at a, this is Baidu, 221, 95 by 70. Looking to roll that to the 321, 100 by 65. Anything. All right, that's a to-do. And SPX is dropping through 60/40 like an a-hole. All right, let's keep going. Do I have a guest on after me? If so, that's cool. That's great. I want to get on the phone with Tasty Trade and do some quick troubleshooting because this platform is driving me crazy today. FXI going higher. KWeb going higher. MCHI going higher. Like China's getting some pretty good flow right now, which I am not unhappy with at all. I mean, JD, if I get it called away, make a few bucks in this one, this will be like $1,500. Alibaba looking good on just the buy side. That one's running hopefully like with no cap. Baidu, I have covered calls. I'm trying to roll it to give myself a few more bucks to the upside. Schwab dividend, it's okay. Schwab growth, fine. Looked at this one yesterday. I don't love that this is semiconductor play similar to SMH. We're on the right side of this trend line, maybe some chop, but I would be cautious on the semiconductor space right now. Costco. So your world's largest retailers, you've got Amazon, Walmart, and Costco. I still want to see Costco hit a 200 moving average. We've got earnings coming up in the next couple of, well, I guess it's out a month or so. It's out March 6th. So I don't know. I would, kind of gladly scoop up the dip on Costco if we come back into the 200 moving average. But if we get to fresh highs again, I'm just not chasing this thing. We've had a really high bar count since 2023. It's up 419 bars. That's a long bar count on a daily time frame. Walmart, but I've got a collar into March at 100. I also might look at a roll on Walmart. So let me see. Nike looking way better off those lows with a 65 and 60 put. MasterCard, oh my gosh, dude. Did they have earnings? They did have earnings this morning. So MasterCard beats on top and bottom. They still didn't pull back deep enough, but man, I'm glad I just didn't fight that uptrend. Holy shnikes. And Visa, same thing. Visa has earnings after market today. MasterCard had earnings this morning. So I don't know if this is good or bad for the consumer. I just feel like more people are using credit and more people are servicing their lives with debt. And credit card companies are loving it because what are they doing? Oh, what's that $10,000 average household credit card debt? That's at 22% interest rates. Or APR financing, 22%. Good luck getting out of that debt cycle. But it looks good for the credit card companies. There's Visa. There's American Express. Johnson & Johnson looking better off the lows. PGR had some earnings plays this week for Progressive and Chubb. Both are looking fine for some income plays. Palantir, I actually was going to look at I've got an earnings play in this one out to next week. Curious if this is going to be a big move or not. Carvana, nothing there. Redfin, Zillow. Sectors. All right, quick look at the sector performance. Gold, silver. Okay, no guess. Gotcha. All right, so for the year, S&P's up 2.68. We're still being led by some interesting sectors this year. Financials leading the way. Healthcare leading the way. Industrials up there. Materials up there. Utilities behind. Tech, not so hot. Probably, and look, tech was crushing it last year, so I'm sure this is what looks to be a bit of a sector rotation. It's as simple as that. So, getting out of the 30+% concentrated Mag 7, putting money elsewhere into some of these, I wouldn't even say beat up sectors. I would just say, they were more value opportunities or just getting out of the high concentration. I mean, a lot of profits were given by technology, a lot of profits given by Mag 7 last year, especially, certainly since 2023, 2024. But financials, healthcare, industrials, materials, at this pace, I would imagine that financials and healthcare, probably safe sectors to be in. Industrials, materials, we've got to, I mean, they're so far looking pretty darn good, but we've got to see what this AI infrastructure play looks like. Two thoughts on the year. I wouldn't be surprised if the first half of the year is indecisive and we have to wait to kind of see when the market takes on direction. I would hope the second half of the year gets its crap together after the Fed maybe cuts in June. Maybe things look better. Maybe inflation does truly come back down a little bit lower, not necessarily, to the 2% rate, but at least trending the right direction. Or the first half of the year is like this chop, really resilient market, and then the second half of the year just gets worse because yields go up, inflation goes higher, tariffs are taking full effect, and geopolitical situations getting worse. So as I say, it's like it's a cautious market. That doesn't mean I'm bearish. I'm just saying, man, I want to trade a lot of stuff that's just out of the money, out of the way, high probability, give price a lot of slack, right? I don't think anything right now outside of maybe some Alibaba is looking really bullish to me. Now we can talk about gold, which has been breaking recent highs, right? Gold, where are you? There we go. Gold is breaching some highs. Okay, so we've got safe haven demand. That's kind of it. And again, like I'm not chasing gold at these highs. I'd still like a pullback, but I'm still benefiting from gold going long, and I'm still in silver as well. So I mean, it's a different play, but if gold wants to break new highs, then I guess I look at this trade. It's already making a run. If we're breaking new highs and we break and we go, right? And there's safe haven demand. So again, that doesn't look good for equities to have gold performing this well because it's not like, oh, everything's bullish. No, it's mostly like choppy stock market. Equities are indecisive. Bonds have been beat up, but yields are, you know, a pain point for the market. Gold is safe haven and crazy amounts of dollar diversification. So I like it. I'm just not buying highs. I'm gonna hold. I'm gonna hold on to my silver. I'm still in gold. I like gold, and I'm bullish on gold. I just hate buying these highs. Silver looking a lot better. That's probably why I'm getting a big jump in profit today. Honestly, if I look at my P&L, so if I go to all positions, I'm just trying to push buttons slowly so I don't mess anything up. Let me see where most of the P&L is coming from today. Come on. There we go. All right, this should show all positions. Once I see some extra colors popping into my positions tab. Seriously, dude. I need a tasty trade update stat. Well, now it just stopped working. Cool. Let's just close Tasty down. You guys take a 5-minute break. All right. Point was, I have a pretty decent sized position in silver and in gold. So silver going up is good. I like this measured move to 36. I'm looking to see if this ends up forming a bullish pattern. I will probably end up adding some more positions here. I may even look at some cash secured puts to just stay out of the way. I have some silver futures going on as well. This is out to March. This one's looking pretty good. And I might do the same thing again to April. There's maybe some volatility, but maybe doing like an April or May silver trade, trying to get silver to go back up to a measure move at 35. SLV gapping higher. That is good for profit as well. Diagonal spread looking pretty good if we get 15 by 34. I paid $13. Break even's 28.90. Get it called away at 34. A couple of trades there. So I like SLV a little bit. I like it more than gold because I can measure the move to the upside. But gold is looking decent. So watch for a break retest. So if we break, retest, and we can go. What I don't want to see on gold is a fake and then a rejection, right? If we see a huge rejection candle where it comes back into this range, this is what I talked about in gold. So I'm just not jumping into these highs yet. I want to kind of give it a wait and see. Make sure that the bulls are in fact just closing and then the bears are not stepping right in to dump it back into this range. So if we're up into open space, then this becomes resistance and becomes future support. So any type of pullback, I look for a bounce, and all of a sudden we're talking 2,800 is now support, and we're probably eyeing the 3K mark for a round number target. All right, but gold's been on the move. Bitcoin resilient, but not at highs, not at lows. I still think this is potentially range bound, maybe some more accumulation. I do think a nice diversification, even though it's higher risk and it's higher volatility. I do think diversification would be Bitcoin. So gold and Bitcoin are good diversifiers this year. They could be speculate, like it could be pure speculation. But if gold is going up, I'd like to think that Bitcoin can follow a little bit. We'll see how much of a disconnect there is between U.S. equities NASDAQ, Bitcoin, futures market. I mean, if we have some choppy times in the U.S. markets, I don't know how that's going to correlate with Bitcoin. So if it kind of stands on its own more this year than before, that's going to be kind of an interesting personality trait in kind of rhythm to Bitcoin. But I think right now we're probably looking at more of a range trade, and this is a bit of a wave pattern. If there's an accumulation zone, we can come back to 90 or come back into these efficiency levels around 80, and I'll just be patient. But if we break and go to new highs, well, I've got exposure. I'm watching it. I would like to see it go higher, but I'm just not taking a bunch of breakouts. Not yet. Not yet. Okay. All right, let's see. MSTR 345. I get it called away at 310. I think I'm kind of done on this one for right now. If Bitcoin stays resilient, MicroStrategy stays resilient, I'm going to have to sit on an earnings play through February though, so that's going to make things pretty interesting. If it shows good earnings, awesome. If it shows bad earnings, I'm curious how bad it gets. Coinbase again, pretty resilient, which is looking good. Income trades, I might look to fill in the gap here on an income trade for coin. I just don't know if I'm gonna get the levels that I want. I want to start any type of like ratio spread or 1-1-1 in like the 180s. So I might look at Coinbase actually. So I look at that Baidu roll. So to do Baidu roll and coin 1-1-1. Maybe some more trading on SLV and GLD. Japanese yen looking a little bit better, but not making like a crazy run for it, not yet. DAX cannot be stopped. FTSE making a crazy run. Argentina making a crazy run. We're seeming to get some flows, non-US, which is making things showing some, I don't know, showing some global market breadth, I guess. DAX is pretty crazy. FTSE's up. That's a big surge on FTSE. Argentina, I've been waiting for pullbacks into like the 100, 144. I'm just not getting it yet. I'm not going to jump into it. China looking a little bit better. Brazil looking pretty good. I've had some shares of this one for a while. Apple has earnings today after market. Amazon pulling back a little bit. Google still in this choppy zone. Earnings on Google should be next week. Yep. So we got some more Mag 7 coming next week. There's Meta fading hard. I'm glad I took that break even trade. We're right back in the middle now. Microsoft pushing a little bit lower. Got filled in the little income trade for the 314 expiration. I'll have my little winner up here with that broken wing butterfly. Netflix, I still have a broken wing butterfly to the upside. And NVIDIA trading at 118, pushing a little bit lower. I'm still going to see if we have a gap fill on NVIDIA. I've got some trades out with March and April expirations. Tesla trading at 392. Surprisingly, Tesla is not moving a ton. I mean, if we're seeing, Meta with a lot of volatility, Microsoft been getting crushed. Tesla misses on earnings right? But it's like Tesla's not moving. Is that because Elon Musk is that close to Trump? Berkshire Hathaway, that's fine. So anyway, that's where we're at. Bonds, not really a lot of action there. 10-year yield down slightly. Down slightly. Mortgage rates haven't budged. Still at 6.96. All right. I will wrap it up there for today. I just want to do a quick spot check on some currencies. I'm still bullish on Aussie CAD. I'm still bullish on Aussie Swiss. A lot of it's just positive swap right now. No trades on the yen crosses. Aussie New Zealand, anything here? That's the trade that I'm after on Aussie New Zealand to try to get back to those highs at 111.75. Aussie dollar. I'm going to hang in there on the dollar for a little bit longer. CAD Swiss, I'm still long. Euro Swiss, I'm still long. XP touch a pocket. I think I just took all my profit on that one. Yep. So I had a diagonal spread. I actually was only in this trade for like 2 weeks. I closed out for like $200 on this one. And also I did this because, so this is I think this is a Brazilian bank. Yep. So retail clients in Brazil, the margin requirement on this was way higher. It was like a 2 to 3x margin, even though it's only a $13 stock. Margin is like 2 or 3x. So it's not a leverage piece. It's just the broker tied up a little bit more capital, which I didn't love. So I just took quick profits on that one, but I looked at this one fundamentally. It looked pretty strong, and we're getting some non-US flows. I mean, we're back down to the COVID lows were here. Here's March 2023 lows. So I took that kind of diagonal position. Yeah, it's fine. I'm curious just for fun what it does, but I'm out of the trade for a couple $100. Just wanted to check out that chart alarm. Let me go back to currencies. Euro Swiss. Euro Swiss, I'm stacking in some orders right here. So hopefully we are going to push a little bit higher than this 200 moving average and start to gravitate back up towards a nice little range high around 99 to 1.00. That's my trade. Any pullbacks, I still have pending order. I have all buy stop levels. So these are buy limits and these are buy stops. So either way, if price is going to 9,800 or 9,900, I'm getting out with that profit. Okay, and then pound Swiss, I'm still long. Still in a big range in this one. New Zealand Swiss, I'm still long. Still in a big range in this one. Waiting. Where I will add more position on New Zealand Swiss would be if we come back down to revisit this flash crash low. So this structure, just waiting, getting above the 200 moving average. The nice thing is if we turn the corner here, I look at this flash crash low. If we have a double bottom, and maybe we don't. Maybe this is a low to high swing, higher low to higher high, and we get symmetry and all that good stuff, and that's fine. That's good profit. But if we come back down to a double bottom, if I buy there and I take profit up there, that turns pretty much every position from this level to this aggressive trendline break to all these equal lows that I've been adding in onto all this. Like I've got another 8-10 positions running on New Zealand Swiss. I can buy some more. I can stack up some buy stops and see if it gets to my symmetry target. That'd be a really nice win. But patience and some positive swap for right now. Dollar Swiss I'm already out of. Dollar yen no trade. Dollar CAD. Surprisingly, nothing has happened on the dollar CAD for what? Almost a month? That's kind of wild. I stacked these positions up. I was long until we hit 1.4, almost 1.45. So that was a nice win overall. Now I'm thinking everyone's wondering like, okay, what's the dollar CAD going to do? Well, I mean, I measured the move and it hit my profit target. So I'm out of the trade. I wonder like, is this a high? Is this a high? Does the market go like that for some type of crown pattern, some type of topping pattern, and then the dollar CAD sells off? Does that mean that oil gets stronger, the dollar gets weaker? I don't know. So I don't have a clean trade on it right now, but I'm glad I'm out of that trade so I can delete that. Okay, that being said, I'll let you go. I'm going to get on the horn with Tasty Trade because their platform's been driving me crazy all morning. So I'll see if I can get it figured out. I will be back at 3 p.m. for a final hour session on my YouTube channel. Gold, we already did, Lear. It's breaking highs. So we're reaching all-time highs on gold. Doesn't mean I want to buy the all-time highs. It means I'm just enjoying the run that we've been having. So the shares that I have at GLD, the trades I have in GLD, the futures trades on GC, I'm just enjoying the profits. Same thing on silver. I've got some trades on SI, some trades in SLV. Silver's looking good too. In fact, before I go, XAU, XAG is actually showing the resistance that I wanted to see, right? They're both actually going up. But what I like is if this is resistance on this instrument, that means that silver could actually get a little bit stronger or get a little bit stronger faster than gold. So if silver can outperform in the short term, that would be pretty lovely. Okay, so we'll see what happens. But I think those are looking good. All right, thanks, everybody. Have a good rest of the day, and I'll see you soon. Thanks, bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.